Let's see how this goes here. Go. Where's the chat? Are we live? Wow, there we go.
We're live.
There we go. We're live. Wow, there's people in here. Oh my God, they've been in here forever. They've been waiting for half an hour.
Okay.
The chat is already cranked. Okay, cool. Numbers are going up. We got 600 people here. They're coming in. Beautiful. Beautiful.
And it's being shared on my Twitter, so that looks like
Shared on Twitter. Let's check the Twitter feeds. Make sure we're dialed in there.
I'm not actually seeing it yet, but
we're up. Okay, let's go. Okay, yeah, a lot of people. The comments are rolling through. Okay.
Yeah.
I think we're gonna have a couple people join here in a couple more minutes. We've got Ryan and Tim Kosman are gonna join. But welcome back, everybody. We're here. I've got some balloons. I've got my Halloween outfit for my favorite financier. I've got the 1992 McDonald's doing whatever it takes one of one apron. I don't know if there are many of these that are out there. And thank you all for joining. Wow, what a day. What a day. What a day. I mean, that earnings call was probably the best. No, that was hands down the best earnings call I've literally ever seen. I mean, that is somebody that's at the absolute prime of their game. This is Michael Jordan NBA Finals. This is Shohei Ohtani batting 1,000, right? Like, this is the best. Michael Saylor is at the top of his game right now, and that was an absolutely incredible earnings call. So, yeah.
Have you ever seen him smile that much on a call?
Oh, my God.
He's normally so stoic, and it was like he was trying not to chuckle the whole way through. I mean, that guy was downright giddy. I was pumped. That was fun.
Yeah,
that was fun.
He was jacked, and then he was just like in the zone, absolutely just in the zone. Hold on, I gotta let Ryan in. Oh, there's Tim. There's Ryan. There's everybody. Okay,
does his audio work? That's the real test.
We've got the whole crew. Ryan, you there? His audio doesn't work. You're kidding me.
Oh my God.
I was muted.
Oh, there he is.
Okay.
You hear me?
Okay.
I was going to have to set up the GoFundMe again.
GoFundMe for the microphone.
This time it's going to have to be for live-in tech support, though. They're going to have to get him here on time, get everything working.
Oh, God.
We got to have him in, man. Ryan's got to be pumped.
I think it's unrealistic to expect a military man like myself to show up on time in a meeting that's in my own bedroom. Can we be real about that? It's kind of unrealistic to me.
That's fair. That's fair. All right, so
Jeff,
I think we got quorum. Yeah, Tim, hit him with the not financial advice. Let's see what you got.
Ladies and gentlemen, the content that you're about to experience may be amazing, but it is not anything except for informational purposes only. And you should not construe any such information or other material presented as legal, tax, investment, financial, or other advice. Ladies and gentlemen, MSTR True North.
Bingo. There we go. We're off. We are off to the races. Now we can talk about anything, right? We could talk about option strategies. We could just get into, whatever we want. No, but in all reality here, thank you to everybody that's joining. Our plan is to just kind of dissect the earnings call, which was absolutely epic. We might pull the presentation up and just kind of roll through it a little bit. There are a couple new faces on the screen that you probably haven't seen before. We've got Jesse and Mason. Jesse and he's our legal perspective on this trade. And we got Mason, who's responsible for creating the irresponsibly long community. So both critical pieces of our True North team, providing critical perspective on the entirety of the MicroStrategy trade. So again, the whole purpose of MicroStrategy True North is to provide a cohesive message and a cohesive perspective of how we as investors look at the MicroStrategy trade, understand what's going on, think about the creativity of the financial infrastructure. You talk about products, talk about how they fit in the global ecosystem, relativities, and just nerd out on this stuff, because really that's what we enjoy. A bunch of nerds on the screen, but they're all a ton of fun to hang out with. So without further ado, maybe I'll kick it over to Jesse if you want to give just a quick 30, 60-second overview on yourself, and go from there.
Yeah, you bet. And let me know if I'm cutting out, because
You're good. I could hear you.
Some of you guys are breaking up a little bit. It's probably on my end. So I'm a corporate lawyer. So I deal in mostly capital markets and M&A for kind of a range of companies. The first 5 years, capital markets, kind of debt and equity offerings. And the first 5 years was really focused almost exclusively on banks and fintech companies. So dealt with a lot of bank regulatory work in that realm. And now a lot more kind of private company, startup companies, but then also some public company work as well. And I'm, a Bitcoin hodler, an MSTR hodler. I'm not a kind of options trader or anything, even though these psychos convinced me to buy call options. So I'm not here for that, but otherwise hope I can add some value.
Perfect. Thanks, Jesse. Over to you, Mason.
Sweet. Well, first off, I'm so happy to be here. It's really a pleasure. But yeah, I'm a kid analyst. That's who I am. I'm 22. I think I'm the youngest kid analyst here. And yeah, I created Irresponsibly Long. When was that? March, maybe April. And my background before that, my mom was a stockbroker some point in her life, and around 11 years old, 4th or 5th grade, she started teaching me about equities. And ever since then, I've been absolutely obsessed. And kind of before finding Bitcoin in 2020, I was kind of a volatility swing trader, momentum trader. And then finding Bitcoin, all trading completely stopped until I found MicroStrategy. And that's kind of the culmination of my Bitcoin background, which is, I've been in it for 4 years, and my equity background, which is actually a decade, which is pretty crazy for being a 22-year-old.
Yeah, absolutely. He's also our head of memeing. So we've got a lot of good memes, good diagrams that come out. Mason's on top of it. Go ahead, Ryan. You had a comment. You want to jump in there?
Yeah, real quick thing. I just wanted to give a shout out to, Mason directly, and also 80IQ Mindset, both Mason for making the Irresponsibly Long group, and then 80IQ for making the Discord den. And here's why this is interesting, right? Me and Jeff never talked about we should have a Twitter group or a Twitter Discord. No, it was never that. These people just did it. They just made it happen without any sort of guidance, and they've really flourished in creating those different platforms or those different spaces where everyone else could kind of rally behind. So I just really want to tip my cap to both of you guys for just organically doing that.
Yeah, absolutely. And keep it rolling. I mean, it's growing like crazy. Irresponsibly Long is up to, I don't know, 9,500 members. MSTR Den Discord is up at probably up 2,000 now, which is crazy. And there's people on there all the time just chatting. So it's fun. Like if you're bored at 3:00 in the morning thinking about, what yacht you're going to buy, somebody will talk to you about it on the MSTR Den. So it's a ton of fun. So let's just start with, I guess, MicroStrategy price. We ended the day at a price of $247. Earnings came out. There was a huge drop. I think it was like a 10, 11, 12% drop, and then a recovery throughout the entire earnings call. I think the drop was primarily on the technical earnings miss, which is a result of the dated accounting. So it'll be interesting to see where the market opens tomorrow, because I think that was the most hardcore earnings call I've literally ever seen. And I know a ton of people are bowled up and don't think they have enough MicroStrategy thinking about the future. So will be interesting to see how that goes. We've got a Bitcoin price of 72,281. And the election is, 7 days away? So, we got a lot of volatility potentially on the horizon, in maybe both directions. So should be a really interesting week. And we'll see how this goes. So I guess without further ado, we'll jump into this earnings call presentation and maybe just go over a few things. And we've got no format here. If people have questions, please throw them in the chat. Our plan is just to walk through. I've got 20 topics written down that we can talk about for literally 20 hours, but we're going to try to keep it sharp to hour and a half, 2, and we'll just see where we go. Perfect. So I'm going to share my screen, and we're just going to jump right into this. Bitcoin Treasury Company, MicroStrategy, released the Bitcoin or the concept of a Bitcoin Treasury Company. I mean, in the past they were called a Bitcoin Development Company. Now they're called a Bitcoin Treasury Company. I think this is a little bit of a pivot, which has got a great acronym with the BTC. But I think based on how the entirety of the presentation was outlined, it fits so well. I mean, they're leveraging the financial ecosystem to create all of these different products for different investor appetites. So I'm just going to stop here. Anybody have thoughts? I mean, Ben, Grain, we've got a nice pivot. I wouldn't say even pivot, just a change in words to a Bitcoin Treasury Company. What do we think?
I think it's a meaningful change in words, though, right? Everyone was so confused by what Bitcoin Development Company meant, right? Everyone took it because they're a software development company to begin with, right? They're developing software applications for business intelligence, and everyone pegged them to developing software. So when they said Bitcoin development, I think the initial flurry was all they're going to start doing now is building applications for Bitcoin. And I think what he actually meant was we're like a real estate development company. We're just using Bitcoin as our asset. But people miss that. And so Bitcoin Treasury Company is a far more applicable name for what they're doing. And I think he used it throughout the call, which was really great, to start talking about their treasury company as a part of their operations, which I thought was awesome, right? Because everyone kind of views this as this, backroom, shadowy group of 10 people, but the main operations is all the software side of things, but all the value is getting generated for shareholders out of the Bitcoin Treasury Company. And so them pulling that to the forefront and making that a direct call out, giving them a rebranding, saying, this is the second silo within our corporation that's going to be generating this shareholder value was a big move, in my opinion. And I think the market's going to be able to understand what it is they're doing and how they're creating this value far better than they've been able to when they were just confused about what the heck Bitcoin Development Company even meant.
Yeah, I never saw Steve Jobs earnings call, Apple earnings call back in the day, the early iPhone days. But the digital capital pitch, not even pitch, just the idea of Bitcoinizing the securities market, right? Like I think there was this idea that like blockchain and real world assets on chain, and then actually like the big idea is Bitcoin, basically entering all capital markets, and no one's done it at the scale. And I think the pitch was as eloquent and refined as it's ever been. Refinery being a bit of a metaphor there. So it was awesome. I was super hype, and I don't think it takes 3 years to deploy it, to be frank.
No, it takes.
What does this sound like to you, Dylan? I mean, you do this for a living, and not to ask you about what you're going to do at MetaPlanet, but when you hear Saylor comes out with $21 billion equity offering, $21 billion debt over 3 years, as a company that's kind of running this playbook, for you personally, was that kind of like a, oh my God moment? Did that even blow your mind that he went that big?
Yeah, well, of course. Well, I think in the chat I said kind of throughout, like, what if he did a $10 billion ATM, keep it open-ended, because like if you're doing the math, the last couple of days, and I understand it's like there's a lot of variance in the volume itself. The last couple of days, they've done close to $5 billion in volume in a trading day on MSTR, right? So because of all the derivatives and options and structured products, and the management team's goading people to short the stock, right? Like, so you just do the math on 250 trading days, and like, right, like this they're compounding the capital raises. So yeah, I'm massively bullish. And I mean, the converts, I had seen some of the converts, some of the data, the FINRA data is published, but the fact that blended average, they're outperforming Bitcoin with like, now sufficiently well capitalized to the point where like the downside really isn't all there, because the first convert they issued, right, in 21, right, I think it was 21. I think it's a 2027 convert, zero coupon, got crushed in the 22 bear market, right? But now that they've kind of got like the structure down, and they have so much more Bitcoin and the debt, like asset debt ratios, so they're a machine right now, a well-oiled machine, and I think then it's gonna blow our minds the next few years.
I think people are going to have a hard time putting scale on exactly what he said too, right? So I started plugging in some numbers here going for 2025, they'd projected out that they do 5 billion equity, 5 billion in converts, right? If you look at what that actually means, right? If you take that $5 billion and you break it up into calendar days, and I know that they'll do all the equity issuances during trading days, but if you just looked at them taking that money and buying Bitcoin with it every day of the year, that's like $13.7 million a day, right? Without the debt, right? Now add the debt in, you double it, 27.3 million a day. If you do it over market days combined, it's almost 40 million. And that's in the first year where they're projecting they'll do the least amount. So you've got this essentially constant bid underpinning Bitcoin right now, where with that amount of capital, they're buying more than the issuance at today's prices. They're buying more than the day's issuance all the time. I mean, it's just, it's a crazy amount of capital to be deploying at that rate. So I think people are nearly, well, maybe they're excited. Maybe I'm just excited and everyone else is too, but they're just doing it from their own shadowy basements. But I just think that those are such staggering numbers to wrap your head around about what that constant bid looks like, that to digest that and come up with what that's going to mean for just the Bitcoin price, forget MicroStrategy, but just for the Bitcoin price, because you've also got the ETFs competing for the supply. And you start to wonder what's going to happen to these OTC desks with this consistent of a bid coming in the door. I mean, it's incredible.
Yeah, so, and think of.
Can you hear me?
Go ahead, Grain. Yeah, jump in there.
Yeah, so let me back up for a second here. So I presented in executive briefing centers in Silicon Valley for 22 years. Can you just back up like 3 slides to the 42? And Dylan, you never saw Steve Jobs present, but I want to tell you guys something, why he's a masterclass and why a lot of engineers will listen to this, or finance people that have very technical degrees and don't get it. Steve Jobs would do something all the time. They would launch a new software release and he'd be like, look, there's 842 features in this release. I'm going to tell you about 3. And the reason why he would do that is he tells you the scope of what's going on, but then Steve Jobs is obviously telling you about the 3 that are the most important. If you can go to the next slide, please, Jeff. Here's the next slide. So I catch your attention. 42, what the hell does that mean? Oh, $42 billion total capital, 21 billion in equity, 21 billion in fixed income. There's like nothing on this slide. I am sure that 20% of people work in corporate jobs, and when you get a slide, you have 2 columns of 6 bullet points in each, and people are freaking bewildered, and then they pile through 100 slides, and you're like, let me beat your head with it. I mean, I watched this and I'm like, okay, I get it. What's he doing? He's raising $42 billion in capital, 21 billion in equity, 21 billion in fixed income. And if I could go talk to any finance person, and if that doesn't catch their attention, you guys know my next statement. I'm going to go grab a Diet Coke. You guys want to come with me? Because if that doesn't catch you, it doesn't matter what the rest of the slides are. And I'm totally happy to go through that, but I'm like, what's the market cap of the company right now?
Yeah, right. 50 billion.
50 billion. Have you guys ever heard of a company that have a $50 billion market cap, and they're basically raising 80% of the value of the market cap in equity and in fixed income? I'm not a math genius. I think the math is pretty easy. I've never heard, and they're buying an asset that's fixed. We all know all the other stuff. So I think that this is some pretty easy math in my head, and continue guys with that. But I wanted to tell you that, Steve Jobs was brilliant. And I heard people say this in other meetings. They're like, oh, Michael Saylor just tells a good story, And I've heard this guy before. Tad, narrative determines price. If you can't get that point across in 1 minute, why are they going to listen to the next 3 hours? I'll stop my rant. Thank you.
Well, think about the narrative he just put out there, right? If you're a company that's sitting on the sideline right now going, we would really like to be involved with Bitcoin, but we're going to wait for a little more regulatory clarity on things. We want to figure out the tax treatment on it. And then this dude flies out of the skies and says, I'm going to buy with 42 billion over the next 3 years. And you're going, wait a second, right? Like, that's really significant. And he's telling everyone out there in the corporate world, train's leaving the station. You're not going to be early for that much longer because we're not going to let that happen, right? They're taking over. He's not looking to coast here. That should be so clear at this point that this is a guy that is pressing this hard, right? He wants the Bitcoin, and he's going to generate the demand if he has to do it himself. I mean, just look at the success, right? People will follow success ultimately. You can only ignore it as this fad for so long. But when you looked at their bonds outperforming Bitcoin, that is a wild stat, right? Bonds are not supposed to outperform new assets that are just hitting their S-curve in the adoption, right? I mean, that's not supposed to happen, but it's been happening. And so anyone who thinks that they're out of demand for convertible bonds, that guy's going to get 100 phone calls tomorrow from convertible bond arbitrageurs going, you got 5 billion coming out next year. How do I get them? How do I get them now? Right? Like, they want him. He's always oversubscribed. So I think this is such a strong message to send to everybody out there that's sitting on the sidelines waiting for the perfect time, that you can't wait anymore. You got the ETFs, sailors coming for you, get in the game.
Yeah, I mean, he just reduced the risk for everybody too, right? Like, there's a $42 billion buy. Everybody's going to try to front run it, but there's no incentive to sell the front run. You need to beat him. And he just told you, I'm going to buy $42 billion worth of Bitcoin. Are you kidding me? It's crazy.
Did you see how many firms were on the ATM filing, right? Like, who can execute the ATM? It was just like there's like infinite demand. Like, I mean, because think about it, right? It's just a 2% spread. It takes a week, right? It's just like, or whatever it is. Call them up on the phone, and so it's just like that 2% return is like quite fast and riskless, right? So to execute. So everyone wants a piece of it. And then obviously that, the equity comes onto the market and the shareholders cheer because their MSTR shares at the same price are relatively cheaper because Bitcoin per share went up. So like, it had never been conveyed like with BTC yield, having been, introduced this year, Bitcoin Treasury Company, and then also saying, hey, we've outperformed everybody. We've outperformed every asset class. We've like doubled Bitcoin in terms of annualized performance, and we're the most volatile, and we have the most volume and options open interest, and those are all good things. Has like never been so clearly conveyed and articulated, and just the raw data. Even if you're not a Bitcoin guy, you've never heard of it. Like if you study finance or follow markets, like this slide deck should make you, like your eyes bug out of your head, right? So it was a smash home run success of it all.
The fee on that ATM, just the ATM, the 21 billion is 2%. That's $420 million that those firms collect just for issuing out these ATMs. I mean, that's crazy.
They're dialed. I think the other really interesting part here is the timing, right? Like how it's tiered over time, 25, 26, 27. And, people are concerned about a future bear market in 27. And you've got this kind of levered tiered structure that's getting you to a horizon that kind of breaks the 4-year cycle. And again, this is providing basically air cover for any other company that's going to start, buying Bitcoin or these convertible bonds over time into the future, knowing that there are other people that are going to be buying this Bitcoin into perpetuity.
The crazy part about that, Jeff, is that if you think that the bear cycle starts, if traditionally 18 months after the halving, around Thanksgiving, the year after the halving was the peak. If you're looking at here, he's ramping up the buying during the typical crypto winter, So that changes the narrative. And folks, look, earlier today, the Google CEO said that 25% of all new code is written by AI. Okay, that's what came out. And whether it's right or wrong, it doesn't matter. But that's one of those things that we like to talk about in Silicon Valley is an inflection point or a hockey stick, compelling event, whatever term you want to slap on it. This whole presentation, we can go through it for the next 2 hours. There's probably 20, 30, 40 compelling points in it. Each slide is a compelling point. And there's very little text written on them. Every single slide you go through, Jeff, we could pick out the slide that showed the percent gain versus all the top companies, or the number of shares traded based upon per market cap. I mean, each one of these slides is a compelling event, and you never see this. Google, I'm very happy for Google saying that 25% of all code is written by AI. Great. What's your next party trick? I'm not trying to be cheeky about it, but they only had one. This deck has got, I don't know, 10, 20. You guys tell me how many good points you think were in this deck.
This deck will be studied in finance classes for the rest of history. Right? Like,
Agree.
This is an epic deck. This is a fundamentally epic deck. It's the best PowerPoint presentation I've literally ever seen. Yeah, I mean the whole thing.
Keep on going. Let's just go to the
next. Yeah, I'll just say
slide.
sentiment's totally changed. Like a year and a half ago, I asked at a town hall meeting at my job, I'm like, hey, do you think there'd be any chance that we adopt a Bitcoin treasury strategy? And no joke, right on the frickin' town hall, the guy was like, nah, I think it's a Ponzi. And I just met with, I had a skip level meeting with my boss's boss yesterday. And I'm like, you know what? I'm going to bring this up again. And I said, look, I want to ask this at the next town hall. And she's like, I think that's a good idea. I'm going to go talk to her. She's going to go talk to her boss. And the sentiment is just completely different. And it's just going to be, I think even with the Microsoft thing, it's just giving every company in the world permission to look. Whereas before they couldn't even just bring it up in polite company.
Yeah, I mean, I'm going to send this to 15 employees in my company, and like at high levels. Just FYI, this is happening. This is a pretty big deal. A company's putting $42 billion into Bitcoin, and they're kind of fundamentally changing the perspective of how a financial company is structured, right? Like we're going to see maybe, I don't know, a dozen companies in the next 4 years that like maybe fully adopt this stuff. But then it's 100 in the next 8 years, and then it's 1,000 in the next 12 years. And it's going to take time, but I mean, the numbers kind of speak for itself. Bitcoin hasn't broken. The math is mathing.
So
crazy.
Yeah, I want to chime in. So I'm going to be very careful about the words I choose. What he has done is, when he talks about, he's securitized Bitcoin as these bonds, right? And obviously the ATMs are already securitized because he's using the ATMs in order to generate cash in order to go buy Bitcoin. But what he has done, and you could go talk to any accountant or CFO, and if you say to that accountant or CFO, how do you monetize your balance sheet? And if they write back, no, let's talk about EBITDA, earnings before interest, taxes, depreciation, amortization. And if they come back with EBITDA, right, then you know right there that accountant does not need Bitcoin, right, because they're too comfortable in what they've learned over their history in college. They are not receptive or curious about what does monetization of the balance sheet mean. And I get excited about this because you guys are being very, very nice to people. I have chosen, given that I'm 57 years old, that if somebody does not understand what I'm saying, I could be, look, that is a suboptimal scenario. And if they double down, I will say to them, you might be the dumbest person that I've ever spoke to in the role that you're in. And if they go, why would you say that? It's because I wake up in the morning, I do whatever I want to do. You have to go into a job and sit on 12 hours a day worth of phone calls and do pivot tables with a million freaking rows in it, and you're not monetizing your balance sheet. And if they don't understand what that is and they have an advanced degree, then you can smack it down. And if you can articulate that, then that's where they have to listen. If you send them this deck and they don't understand it, you have a choice. Do you waste valuable oxygen talking to them, or do you just go figure out how you can get more money to buy more shares of MicroStrategy? I want you folks to determine what's a good use of your time. And if you're talking to somebody 4 levels below the CFO, by the time you get to the CFO, they'll be, can you explain this to me again after you spoke it to 8 people? And so I hope everybody goes and does that and takes us to go talk to these companies. But Saylor's given this playbook out 4 years ago, right? And he said he wants every company that can to copy it. And basically, we have a few that have done that. And Dylan has done great work with this. But I want you folks to realize that Dylan's able to articulate this message. But Dylan, when you go talk to other companies, do they get it? Or are they just like, yeah, interesting?
It's early.
It's so early. It's
and
so
you know
early.
what I say about that? And that's where I say, right to that person, I get that you guys say that. It's like, it doesn't matter after this year, because Saylor's been doing, it'll be a half a decade in August. And when I use the term half a decade as opposed to 5 years, how much of a head start, how late do you want to be to a market? And the craziest metric ever was Microsoft came out with the Zune player and they said, oh my God, it's so much better than the iPod. The next day, Apple had announced they had shipped 100 million iPods. And they said, Apple is a turd. Don't get me wrong, Microsoft is one of the most valuable companies in the world. But they came out with their own phone that was a dismal failure. And the Zune player, everybody on the call is like, what the hell is a Zune player? They were not selling it for half the price. And they didn't have the App Store or iTunes. So when they say this stuff, you're like, really? You introduce a product after the number one competitor in the world has already shipped 100 million? You're too far behind. Ryan, go ahead.
Yeah, I think what Dylan is saying is so true in terms of like we're early, because that's how paradigm changing technologies work, right? It's a bell curve of adoption, but it's like, here's the reality, right? I'm reminded of the Ayn Rand quote of like, we can ignore reality, but we cannot ignore the consequences of ignoring reality. So it's like it's just one of those things. Like, this might end up being like an extinction level event for many types of entities, whether it's public companies, private companies, nonprofits, like whatever the case may be. Like if people fail to, understand this stuff, it's on them, and I'm not going to lose any sleep over it. But I feel like I see it from both sides about how like we're early, but like there should truly be a sense of urgency with this kind of stuff. Like how when I was pounding the table with my my CIO at Bristol Myers Squibb 2 years ago, 2 weeks or 1 week after FTX blew up, it's like, it's now or never,
Ryan, one of the things you said on Twitter, and people have talked about this, you guys have talked about it a bunch, but Saylor comes out, among other things, was basically you smash the mNAV debate, and once FASB comes out, that the blend of PE ratio and this mNAV multiple thing, and Saylor being like, we're a tech growth company, like you're talking about a 2x multiple, like what are you talking about? And BTC yield, I think there's a real legacy like to BTC yield, right? It's early in the sense of like no companies are doing this, but it's they're hitting escape. MicroStrategy has already hit escape velocity in terms of the biggest pubco holder. He's even articulated quite clearly, like even if you're a big tech right now, right, you're not going to deploy $42 billion into Bitcoin, or maybe you are, right? But like still, we already have reserve. We've been selling converts. We've already had, like, we can sell $1 billion of converts tomorrow. We're solely dedicated to Bitcoin. We're solely dedicated to BTC yield. I mean, what big tech company is going to adopt BTC yield, right? So like they've reached escape velocity in terms of Bitcoin pubcos, and they've open sourced the playbook for so long, but this is now being like, all right, like, okay, we're going to go raise, 10 times the capital we have been, or 5 times the capital we have been to do this. And yeah, we're just telling you ahead of time, and give us a ring if you want some converts.
Yeah.
It's
Foot on the gas. I mean, foot on the gas pedal, right? And then this whole next section here, which is like 6 slides, it's like he dunks on the market every single slide. It's just like dunk after dunk after dunk after dunk, MicroStrategy, annualized asset performance versus the top performing stocks in the S&P 500, outperformed BTC in the Mag 7. And then he explains, like, as a corporation, like, where you have to put your money, somewhere. You can't put all of your money in equities. And so you've either got to put it in bonds, which I think he used the term, I really like the term he used. He's like polarized positively to capital, which I think that comment in itself was a really big comment. Polarizing positively to capital, and not because any company that is holding cash, that cash is losing money, and the shareholders are saying, please give me the cash back, buy the stock back, like, give me the cash because I want to go do something with it. Whereas in this circumstance, because the capital is finite and has a strong trajectory into the future, there's more benefit of having that capital sit with MicroStrategy as opposed to buying shares back, or whatever that may be. So
did you see Coinbase filed for $1 billion of buyback?
My God, I saw that today. It's like
right after the presentation ended. They're like,
hey folks, let me chime in about this slide right here. So look, and this is how I make math very easy to do whenever I talk to financial advisors. There's a 60-40 bond stock portfolio, or stock bond, doesn't matter. And 60-40 makes the math kind of hard. But let's just say it was 50-50, right? So if you had a 50-50 stock bond portfolio, right? So if you bought bonds since 2020, it's negative 20%. And then let's just say you're in the NASDAQ, right? 50% of your money was in the NASDAQ, right? So you would take the negative 20%, right? And you would subtract it from the 71%, which would give you 50%. And then you have to divide by 2, right? So if you do that, you have a 25% fucking return. And the difference between 25% and 2,000 is what? 40x? Please, someone check my math and say, I think I'm right. And so if somebody says, oh, how long could this go on for? Is this a big deal? Why is this important? Why are you passionate about it? It's like, really? You're going to pitch a stock bond portfolio, and 50% of it's going to be either zero or negative numbers. And you have to pick, what are you going to pick? You bought Bitcoin? They're not going to pick Bitcoin. So this destroys the value of any investor. And if you say this to your CFO, recently somebody just said to me, this person was thinking about becoming a CEO. And the person said, yeah, well, when you compare it against the Mag 7, and the person has a very high ranking role, and said, and they said, what's, Mag 7? The person's like, what's the Mag 7? That is your litmus test. If you say to a CFO, what's the hey, as we all know, the Mag 7, and they don't know what the Magnificent 7 is, that talking to them for a minute longer is a waste, not of their time, a waste of your time. And Dylan, you probably talk to super, super smart people that maybe are curious about figuring something out. But that's your test question. Do you want to outpace the Mag 7? I wish there was a slide that was in this deck that talked about the Mag 7. Really? Because the Mag 7 is, oh my God, he put the slide in there. Imagine that, right? Like, for fuck's sake, folks, it's like he laid this out. If anybody refutes this, I don't care. Here's your pitch deck. And if they don't want to look at the slide, go grab a Diet Coke and walk away. Just tell.
I think
the problem, Greg.
Well, what's the problem?
No, I was going to say the problem is that I think new investors view it in the same way that you experience talking to people that haven't invested in Bitcoin that, yeah, it's done this and it's, you know, it's outperformed every single asset, but it can't continue. It just can't continue. And so they look at that and they see the performance.
Yeah. I mean, most of the conversations I've had, it seems scammy, right? Like
hold on. I gotta chime in. I'm getting recommendations that I need to switch.
No, I'm not saying that's a good argument, Gray. I'm just saying that's
no worries.
He's switching to Coke Zero.
People want me to go to Coke Zero. I will start trying Coke Zero, but I don't get paid by Coca-Cola, folks. Just to let you know. But go ahead. Sorry, keep on going.
Yeah, I was just going to say it's analogous to that.
Yeah, there's concern. Yeah, there's concern, right? Like the comments I hear, I was like, it makes me nervous when I see this 4-year compound annual growth rate chart. Like, okay, well, like, maybe you should consider it, right? Maybe you should. It's worth looking into. Why is this happening? Why does this 4-year compound annual growth rate exist? You know, what is it about the asset but the market is interested in, right? Like, this is a $1.4 trillion asset that has potential to go to 100 trillion, right?
I think when I look at the slides that he put in here, I see this almost as being a pitch deck to the other zombie companies, right? Because one of the things he's highlighting over and over, and he started by saying that the reason that the big tech guys couldn't catch them is because they can't make Bitcoin as meaningful on the balance sheet as MicroStrategy did, right? MicroStrategy started from a much smaller place. So when I look at this, he's telling a story out to the market, to all these other zombie companies that might be in a similar spot they were in, where you might be $1 billion company, you have a really strong balance sheet, strong cash flow, but no growth. And he's going, look at how we beat the absolute brakes off the Mag 7 over the last 4 years here, right? We've been crushing them in every metric that we can come up with right now. And this is what you should be looking at if you want to inject growth into your dying company, right? Here's the playbook to just inject it, right? It's a simple playbook. You don't need to go make a ton of investments and human capital and all these things, because you, with a small targeted team focused purely on shareholder value accretion, following the metrics we've already created for you, you can go out and run this playbook because you're a public company. You have access to these capital markets. We're showing you how to manufacture these types of returns, right? And I view this and all these slides of him showing them against all the giants out there in every category as a direct pitch to those types of companies, saying, this is your shot. We did it. We went through the fire. We figured it out. We stepped on the landmines. We fought the battles on accounting. We've done the work. You just have to plug in. That's it.
Hey, Ben, I got an alternative. I think your idea is sound. I agree with it. I think the other thing that he's doing here, and this is really important, is that this pitch deck is going to the people that buy treasuries and corporate debt. He made this, I'm sure he has a team of people at MicroStrategy who's ever buying the bonds, because he mentioned this multiple times throughout the call, that they get the financing, the $21 billion in the convertible notes, right? So what I think is that this is his pitch deck to that. And what he's saying is, hey guys, I've already done this. This is the formula. I've been doing this for 5 years. Here's the big number. He's already cracked it. He's already got it, right? So that's truly awesome. And I think that's where part of this deck is going, is to raise the money. And I want to give you guys an interesting scenario. It's the same thing that's true with people. Once you have equity in your house, right? You buy your house, the house goes up 30, 40% in value, for whatever reason, over 2-3 years. And you put down 20%, and now your equity has gone up by $200,000. You can now take 50 grand out of it and go do something else. You have now done your balance sheet. Your income didn't change for the most part, right? Your balance sheet changed, which is exactly what MicroStrategy is doing. Your equity goes up in your house. You take out a loan against it, home equity line of credit or a home equity loan, very similar things. And what you do then is you've now monetized the equity in your house, and you pay for it out of cash flow. And that's not a taxable event. Not giving anybody advice here, but when you take a loan out, it's not. And you can go pay for a college education. You can pay for a car. Okay. And then you have more time to pay it off. That is balance sheet monetization with a home equity loan. And anybody that's a homeowner should know that. And this is what Michael Saylor is doing. And if you talk to a chief financial officer and they don't get that, you've just wasted time. And that's how I want you to make this compelling. It's not like they've invented something new. They've just changed the narrative from cash flow, EBITDA, to balance sheet. And then he's showing this slide right over here is crazy. This is why I said that no company can catch this. As a percentage of their market, look, if Microsoft goes and buys $10 billion, let's say they buy $30 billion of Bitcoin, right? And assume it didn't move the price for argument's sake, for theory. If Microsoft is worth $3 trillion, right? It's only 10% of the market cap. This is completely flipped, showing the liquidity and options open interest based upon a percentage of market cap. So Microsoft would have to go buy $3 trillion worth of Bitcoin to make it 50-50. You guys getting the math here? This is some crazy shit. I mean, I'm swearing because people look at the slide. Oh, it's got some cool bars on it. And I'm like,
Yeah,
really?
yeah. Look, I mean, let's pass the mic a little bit, right? Like, this is a hugely important component here, right? Like, everything that Michael Saylor put on this slide is that, you know, MicroStrategy is playing with the big dogs in terms of open interest and trading volume, right? Like, it is one of the most volatile stocks, and that makes it incredibly appealing to all of these other different capital pools. And, you know, Ryan, I know you've done a lot of research on this. Adrian, you've done some research into this as well. I mean, what's your take on this perspective of like liquidity? How he talked about volatility. What's your thoughts?
Well, so I have a few thoughts. One, I'm equally as excited about the earnings call. That was fantastic. I thought Saylor's energy was very, very different this time around. He seemed more self-assured, but at the same time also more relaxed. So that definitely gives a lot of confidence in the fact that he's implemented this initially incredibly risky strategy. And now that it's bearing fruit, I think he's definitely become more at ease with the prospect, and he has some more bravado about him, right, when he's talking about it. So that's the first thing. The second thing, I think the notion that someone can't catch MicroStrategy might be a little bit short-sighted. Economic conditions can change. There are a lot of factors that can come into play. There's global factors, there's macroeconomic factors, there's political factors.
It's over, bro. It's over. It's over.
Well, I mean, it could be, but what I'm saying is, with the larger institutional players in the market right now, do I think we're going to experience an 80% drawdown like before? No. Could we experience a period of ranging between, I don't know, 75,000 and 85,000 for like 2 years? Possibly. That can be our version of a bear market. And then someone can catch MicroStrategy in that kind of a scenario where Bitcoin isn't just ripping up, and they have time to allocate and come up with their own version of this plan. I'm not saying that to dissuade anyone from investing. I'm still buying the shares. I just want to make sure that we're not getting tunnel vision and thinking that this thing is done with and it's over with, and that no one can catch him. With regards to winning people over or trying to explain it to them, I mean, I don't think our view should be, if you're too dumb, you're not going to get it. We're not going to waste our time. The way this thing grows is by making it as accessible as possible. So us being the true north, I think we should try to put out as much information as possible that makes it accessible to as many people as possible. And with regards to the volatility and the liquidity, he has created a situation where it's kind of a catch-22 if you're trying to bet against him. If you want to short him, you have to buy his shares. If you want to long him, you have to buy his shares. If you want to invest, you have to buy the shares. If you want to see him fail, you're giving him more interest in the market. Like, every time I play this around in my head, because of what Bitcoin is and because it's underpinning his entire corporation now, I'm trying to see who's going to find the way to blow him up. That's the kind of thought exercise I've been going through these last few weeks. I don't think it's there. If anything, the weak point could be the BI business, if that starts to take a dive. and then he doesn't have as many ways to service the debt as possible. But on the flip side, he has the Bitcoin side of the business that's going to grow, right? So
it's tough.
I don't know.
He's got a huge toolkit, right? Like his toolkit is massive, right? Like
He has all kinds of levers he can pull.
all kinds of levers he can pull, and even if he's tapping the ATM in a period where there's a material premium on the stock, I mean that cash, he's clearly laid out it's going into Bitcoin. But in a theoretical scenario, if it ever were to trade below, like you could have cash on hand to buy the stock back to pump it up too. So it's like it's the ultimate threat, like the full circle ultimate threat, and it would be really challenging to bet against him. But the thing is, there's this massive information asymmetry here. And I think a lot of this, I even did this myself when I first was seeing the GameStop trade start to run away, right? I was like, this is so stupid. I bought puts on GameStop like an idiot. I sold them the next Monday, realizing that I was totally screwed after I did, a ton of research. But there are people that are going to think they're smarter than MicroStrategy here, and they're going to see the stock running up, and they're going to be shorting the stock because they're going to have no idea that like what is actually going on. They've never understood Bitcoin. I mean, they don't understand the math, the computer component, like that. It takes so much time to understand what's going on here, right? I mean, this is like a 2-hour presentation outlining this whole strategy. Like that takes time for people to like soak it in to understand really what's going on here. And it's crazy.
Well, with that, like let's play out the scenario of who can catch him. So we all pretty much agree that Saylor can maybe dull the bear market by himself with the constant buy-in pressure. And then we also have the ETFs. Then we also have smaller players that can come into the market, like Semler Scientific and others like them that can adopt the strategy. Then we have who knows who else is going to come into the market. The reason why I bring this up is because are we going to head into a situation where there's so many players in the market that adopting this strategy becomes, in their view, short-term counterproductive? And what I mean by that is everyone's trying to look for the big rip up, right? Saylor had a 4-year vision. He probably has a 10-year vision and a 20-year vision. I don't think corporations are looking at that like this. They're thinking next quarter if Bitcoin goes down, our shareholders are going to get pissed off at us, and we're going to have nasty calls, and we're going to have all these meetings and so on and so forth. Very, very short-sighted. If there's a situation where Bitcoin is not necessarily going to 250K, but instead it's going to 100, then 125, then 150, and it's just very, very slowly trending and not really having that explosive volatile upside, would the argument then be, well, why would we adopt it anymore? The incredible upside is gone. Now we don't have the same impetus to adopt the strategy at a corporate level. And I'm thinking about big players here, Microsoft, NVIDIA, Meta, so on and so forth. I don't think that's right. I'm just throwing it out there for consideration because, again, I want to avoid tunnel vision. I always like to see the opposite side of the play. Right now, I'm running out of ways to see the opposite side of the play, so I'm trying to come up with some.
Well, here would be mine, right? If I took over one of these smaller companies, I wouldn't be competing with MicroStrategy on a total Bitcoin holding basis. I think they've got that in the bag right now, right? I'll be, because I'd look at it and go, okay, a big competitor comes in and tries to buy up all this Bitcoin. Well, Saylor's got $21 billion on the ATM. So you go into the market and you start buying, I'm going to go into the market and I'm going to start buying. I'm going to make you buy at a higher price, right? If I was being vindictive about it. But what I would actually try to compete on, and this is what I think you'll start to see, is I would look at trying to create a more volatile product, right? So you've got MicroStrategy who's leveraging up the fair market value of their Bitcoin up to 25% and trying to manufacture this enhanced volatility. I think if you're a smaller player in the market, you might see some of those come in and go, well, if they're doing 25, we're going to do 30 or 40. And you'll probably get some that get themselves into trouble, right? If they lever too high, too fast. But I think that they need to find a way to draw that liquidity into their shares to generate the same type of interest in the products that they're going to put out into the market. So if it was me, I wouldn't necessarily be looking at, I have to catch MicroStrategy and total Bitcoin holdings. I'm going to try to make it such a meaningful portion of my own balance sheet and then I'm going to press the leverage higher than MicroStrategy is right now to try to draw some of that capital that's attracted to MicroStrategy, which will be some of the smaller players, right? The huge players, the huge institutional capital needs the deep liquidity pools. So they're probably going to stick with MicroStrategy for the time being. But there might be some of these smaller players that can't necessarily force their way in there past those bigger players. And there might be a market for that for one of these smaller mid-tier companies to fill the gap. So that's how I'd approach competing with MicroStrategy, using the same strategy they're using. I just do it on kind of a different scale to attack the volatility side.
Well, if you think about like the interest rate environment that we're in right now too, right? If interest rates remain high and the cost of capital is high, like cost of raising debt is high, like traditional debt. And if you have a stock that's on the lower end of the market and you just have no way of raising capital because your stock is suppressed, what like your last move is look at a Bitcoin treasury strategy if you have any cash on your balance sheet. And then all of a sudden you that's a spark that lights a fire because it attracts, significantly more interest in your stock. And I think we're seeing it with Semler right now as well, right? Like, yeah, it hasn't had quite the volatility of MicroStrategy, but people know about Semler, right? Like that alone just changes the game of how your stock trades in the market. And I can see if we continue to be in a challenging interest rate environment, and maybe not challenging is the right word, but like, above 3, or if we go to 4, or, whatever it may be, I think we can see some desperate companies looking for alternative solutions, and that's where something like this gets really attractive.
If I could chime in on the comment on, like, I know Adrian was steel manning just like what could go wrong, but I see like there's a ton of commentary often of like, oh, the margins on the software business or this or that growth, and I know they highlighted it, of course, as they should on the earnings call. But right, if you just do the back of the napkin math on like, all right, 21 billion ATM, 3 years, 7 billion over 252 trading days, 30 million-ish a day. Like they're getting cash in the door on one day of an ATM is the cash flow, or, is like how much they're maybe 2 days of trading, 3 days of trading is, that 10-person Bitcoin treasury team, right, is getting that enough to cover interest on, all of the convertible bonds right now in a few trading days, right? So like you don't necessarily need to like a twice as large or profitable software business or other separate enterprise outside of the Bitcoin Treasury Company, because their stock is extremely liquid and you can finance all these 1% interest rate converts with the equity issuance, because net your BTC yield quarter over quarter, year over year is still so high. So like if you take a little bit of that marginal dilution and like pay interest on your converts 4 years out, that's fine with me. That's fine with me as an investor. Like I don't know about you guys. But like they could literally run the company with like those 10 guys. And that's no disrespect or no shade to anybody on the enterprise software team. I met some of them in May in Vegas, right? Like, but this, as they've said many times, the convert arbitrage and the fact that you now have to discount this BTC yield into the valuation of MSTR, and this is kind of self-fulfilling, right? This feedback loop, like that's the profitable enterprise is Bitcoin as in the securities market. And like, they could take on 5 times as much interest expense and just cover it with the Bitcoin Treasury Company. So like the software talk to me is like, like, and that's no due like disrespect, more so just like on how big the idea is of the BTC Treasury, Bitcoin Treasury Company.
Well, they said that, right? That was in the questions on the back end of it when someone asked the question, what happens if you can't cover the interest with the cash flow from the software company? And they kind of shrugged it off and they go, well, we've got a $21 billion ATM, right? I guess we could probably use that. And the reality is they can. And that's the reason why there's targets, right? That's why you say we're going to get a 6 to 10% Bitcoin yield, right? Bitcoin per share yield, because that gives you flexibility, right? You can use, like you said, Dylan, it really only, if they're getting, I don't know, maybe it takes 2 days of ATM issuance to cover the entire year's worth of interest payments on the convertible debt. They can do that very easily. And if they use all the rest of that for Bitcoin, it's still going to be massively accretive, and they'll easily hit that 6 to 10% target range and no one's going to say anything about it, right? Because that's exactly what they told you they would do. And they'll most likely be overachievers, right? Sailor's not exactly done a, we'll do the bare minimum so far, right? They tend to go way overboard. So that wouldn't give me any heartburn. I think the optics, people in the market who aren't familiar with the strategy and what it is they're doing might start making noise about that, going, oh my gosh, right? They're burning cash that they don't have. But that just shows a lack of understanding in how the capital markets work and how they raise capital and how they're deploying it, right?
Yeah.
What's the value proposition of the method in which they're deploying it? And people will catch on, right? I mean, they're going to shove it in your face over and over again until you finally listen, which is the beauty of Saylor doing this. I think he's really loving this phase of the strategy. I don't think he liked it early on when they went into the bear market. I think he's loving this phase.
Yeah. So like when I bring up the what can go wrong thing, it's not because I actually think it can. I just want to bring it up for discussion to make sure that we don't get tunnel vision. Now, there's two things. Well, technically three. Like I'm seeing in the chat, people are saying, "Well, what if Bitcoin gets hacked?" Which I'm surprised that's still coming up. That can't happen. So like that one, I'm going to say is just that's done, and we can get into that if people are curious about it. The other thing that I can think of is, well, let's go back to the main man risk. What if something untoward comes out about Michael Saylor, or something untoward happens to Michael Saylor, and there's a massive sentiment shift in MicroStrategy, and it causes a lot of selling off of the stock, and the BI business crashes? I've thought that through. That doesn't seem too feasible to me either, just because I think that will cause near-term heartburn, and near-term pain, but I don't think it's going to stop them from doing anything. And the only other possible scenario I can think of is that if there's a geopolitical event like war, right? But that means everything's going down. So, and that's just a matter of a few quarters of recovery after the fact, right? And even war is good for Bitcoin because war has been good for gold. So I think that the more I kind of peel back the layers of what can go wrong, I'm running out of reasons, which is what's giving me more and more confidence in my play. The thing is, I want to make sure that we're asking the questions, because I was super confident about certain things in 2015 and 2016. I got my ass handed to me. So I learned those lessons and I've taken them forward. But I think what Saylor's done here is, I'm not saying it's Teflon, but it's very, very resistant to failure, I guess is the best way I can put it, because of Bitcoin and because of the way he's going about things. Others can reproduce it, and I think the reason they aren't is because of skepticism, and it has nothing to do with Bitcoin. I think it's larger skepticism. We have the 2000 crash, we have the 2008 crash, we have the shenanigans that went on after that, then we had the COVID crash, we have JP Morgan paying billions in fines, we got corruption in the financial markets, we got all kinds of things that I think are playing in the back of people's minds at the corporate and individual level that's making them skeptical. And I think that is the barrier that you have to get past to get them to understand Bitcoin, to understand the flywheel, to understand reflexivity, and understand all those other pieces.
Yeah. And Ryan, I know you want to jump in here real quick. I just want to say one thing. I think the higher probability issue is you have 5,200 other companies that are tied to $1 that's melting. Right. Like that's probably that's the bigger risk. You've like in my mind, the relative size of these risks, we're trying to think through black swan events, right? Like nobody can think through a black swan event. But it's also helpful to think about the risk on the other side here, where you got 5,200 other companies that are tied to $1, where if there's systemic issues, they're going to be fighting for solid footing and hard assets that aren't bleeding them dry, basically. Go ahead, Ryan. I know you wanted to talk on key man risk.
Yeah, I mean, Adrian said a lot of great things there. I'd love to talk to you more, Adrian, either online or offline, about the hacking thing, just because I'm fascinated by that. But the thing that I do,
possible.
well, that's music to my ears. But I want to learn more about the technical aspects and like actually get your level of understanding on this. But all right, look, so key man risk. I hate thinking about this. I think we all hate thinking about this. I think Saylor's going to live forever. That's what I'm thinking. So that's the fantasy, but here's the reality is that like MicroStrategy has reached an inescapable point of escape velocity, meaning I believe all of the hard work has already been done. And it's not just Saylor. That's like the key point I want to drive home. Like I know some of these people personally, like how Dylan said, like we met them in person. These guys and gals are as sharp as they come across the board, from the Treasury team to the software team. And I'm going to be talking with Tim Kotzman on Friday on a podcast, and I'm going to be going off like obscene level about like the software business. But again, back to the key man risk. Yeah, of course, that doomsday type thing would be problematic in the short term. But again, here's the reality. We've reached the escape velocity, and I'll use Tesla as an analog. I do not think, and I've studied Tesla for 5, 6, 7, something like that years. I do not think Tesla has reached escape velocity because full self-driving is still not a universal thing. We don't have hundreds of thousands or millions of megapacks, in industrial use. We don't have like solar panels on every house, blah, 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 all that stuff. I can go down the line, all those things. That's a massive undertaking, like unimaginably massive undertaking. Where it comes back to MicroStrategy is like, look, the hard work's already been done. We front ran Wall Street. We front ran QE5. We front ran nearly every other entity on earth. And also in that, during the front running process, we actually inspired others, whether it be El Salvador. Semler directly mentioned that I've only listened to one or two of their earnings calls, I think. I can't remember, but on one of them, Semler said, like, we were inspired by MicroStrategy. The other company, Microsoft, maybe you've heard of them. They directly reference that in their in their formal documentation. So it's like the hard work has already been done. The playbook has already been written, and this mission is so it's complex, and everyone can listen to Ben Workman talk about like all the stuff in the convertible bond market, which I'm still like actively learning as we go. You know what I mean? But this mission is much more simple. It's much more direct than something like Tesla, who I do not think they've reached escape velocity. And by the way, they're trading at like $700, $800, $900 billion in market cap today. MicroStrategy's at 50. So that like that's
base effect math is working against them.
That's my key point there on like key man risk, is that I honestly don't think we have one. And I look, I love Saylor as much as everyone else. I'm kind of jealous that Jeff wore the costume of the of the McDonald's outfit. Like, so like I'll be pounding the table like long on Saylor until I die. I think he's the college professor that like we all wanted but never got. So I'm not overlooking any of those things, but like the escape velocity, key man risk, like I almost don't even say it.
Yeah.
I loved what they said at kind of the tail end of that earnings call too, where they were talking about how they're going to really ramp up their efforts to go out and essentially become advocates for putting Bitcoin in treasuries for all different types of entities, right? Corporate entities, countries. And it sounded like they were planning to get a lot more active in that space. And what that says to me is you're going to start getting a lot more public facing figures out of that group. Right? Because if they're going to be out there, that means you're probably going to be speaking at a lot of these events. You're going to start becoming more public, which might give Saylor a little bit of a reprieve on being the only guy within MicroStrategy that's out here really pounding the table and giving the message publicly, right? He's got a killer team working behind the scenes with him, right? That's in good hands. I'm with you, Ryan. I don't have a single concern about their ability to continue to execute this. I think people are worried that when Saylor goes, like his messaging, because of what he's been through and the level of intellect that guy holds, the message he puts out is so coherent and it strikes home with people that I think losing that voice is what concerns people. because that's what people are following, right? It's the same thing with like a Steve Jobs in Apple or an Elon with Tesla, right? People love a figurehead that you can root for or hate, right? Either way, it doesn't matter. You've got a reaction to him one way or another. And Saylor's that guy. But I do think that it sounds like if they're going to start getting more vocal and becoming more of an active participant in pushing this Bitcoin treasury strategy beyond, let me just say beyond being the first one to really do it, right? They've done enough. All right, let's say that. It's not like they haven't been pulling their weight. They're the ones that launched this thing. But seeing them out there pushing this on a grander scale, I think is going to be a huge movement and is going to bring a lot of eyes to the company and to the strategy in general.
100%.
Yeah, and I think he even addressed a little bit of key man risk himself when he was talking about what if his shares go below 50%. And I love me a little high drama, and I'm going to say it this way, and it might even be a little blasphemous, but I think Saylor created financial engineering products in Bitcoin's image, and now it's just like the bacteria is multiplying, and he doesn't even have to do anything at this point. Just sit and watch it evolve. And I think he's so inspired by Satoshi, but he can't recreate the Immaculate Conception. So I think he may even just be using the dilution as a natural progression towards taking himself out. Like Satoshi disappeared, and so he's almost like disappearing himself in an accretive way that, and he even talked about being partners with the shareholders. And he's talked about, taking Bitcoin to his grave. And I thought, what if he's even thinking of MSTR as being like a donation to humanity as well?
That gave me the chills down my spine. That was awesome.
He said that. He said that in Nashville.
Yeah,
he
yeah.
That.
Did he?
Yeah.
Yep. It's like a public trust or something. But yeah, I think it's bigger than buying the next yacht. That's for sure.
Right.
Yeah. But I think that's a really interesting component. It's this trail. It's this continued accretion where his kind of voting power just slowly gets a little bit less and less. But like, nobody's voting against this strategy. Is anybody on this call voting against this strategy? No. Is any other shareholder or convertible debt holder voting against this strategy? Absolutely not.
Well, so here's the thing. That reason why I brought up what can go wrong. I know I've mentioned that I got my father into Bitcoin through the ETF after failing to get him into Bitcoin with cold storage and all that stuff. So today he actually sent me a text message that damn near made me fall out of my chair. He asked me about MicroStrategy. Now, the reason why this is huge is because my father does not watch financial news. He does not read financial news. He doesn't have anything to do with it. Once I saw that made me think, okay, so is retail here now? And is this thing really about to rip? Because I don't think retail is here. And I think that the notion of it being self-perpetuating, the notion of it being potentially like Wall Street bets, the notion of it being something that Saylor has created and he could just walk away from and just watch it really catch fire and take on a life of its own. I think that's very, very valid. And the thing about it that's so strange is that Bitcoin might hit escape velocity because of TradFi, when Bitcoin was designed to upend TradFi. It's a weird dichotomy that's taking place right now. And to some of the points that have been brought up, I think Saylor has found a way to make Bitcoin exist in TradFi. It's going to become self-perpetuating. And once it really catches on in the form of like a Microsoft or whomever taking this thing on and nation state adoption and so on and so forth, I don't know, man. I don't think we're bullish enough about it. Even though I'm trying to figure out all the things that are going to go wrong with it, I still have to come back to my core thesis as to, is Bitcoin going to do well? Yes. Is MicroStrategy do they have a good plan? Yes. What are all the tailwinds that are coming? That just far outweighs anything that could potentially go wrong. So while I'm still testing the failure theses, I don't know. I'm running out of ideas now. And plus, the U.S. has to service the debt, so they're going to start printing again soon. There's just straight up mathematics. That's probably coming in 2026. So that means that the 2028 cycle is going to be out of control because we're going to have a whole bunch of stimulus in the market. There are all kinds of tailwinds that are coming in that I think when they hit, are really going to accelerate this thing. So to what everyone else is saying, even though I seem like the one trying to be bearish, I'm not. I think that it might be over with in terms of catching him in like dollar amounts and equivalent dollar amounts and equivalent Bitcoin amounts. But corporate adoption, I mean, all it takes is one of the Mag 7 to adopt this thing, and it truly is all over. That's my thought.
So
I think the important thing that you said in there, sorry, Jeff, that you
good.
said in there was when you said that TradFi is what really could bring this thing to the next level. I think what's important for everyone to think through for themselves is how you view a asset like Bitcoin that gets released to the world and someone relinquishes control of it, right? Once you release something like Bitcoin to the world, like Satoshi did, you put it out there, you walk away, right? Once you do that, it takes on its own life, and you can't solve for every use case that's going to pop out because you're not going to know what all the use cases are that pop out of it. And so corporations entering it, what it does is it really legitimizes the design of Bitcoin, and it really amplifies that store of value when they're starting to acknowledge that level of value in the asset that was created. So I know it goes against kind of the Bitcoin maxi mindset. And early on, I was all about it's only for individuals, self-custody. We got to keep this out of their greedy little fingers. But I've started to change my thinking on that a little bit to go, once something's free to the world, it's up to the world to decide how it's going to be utilized. And you're starting to see that come to the fruition with what capital's flowing into the asset. I think it's a really interesting case to follow.
Well, yeah, Bitcoin is supposed to separate money from the state, but I think what's going on right now is that we really need to separate money from religion. And what I mean by that is a lot of OG Bitcoiners are becoming very dogmatic in their views. And I'm getting into these spats on Twitter all the time with people DMing me like, I thought you were a Bitcoiner, I thought you were this, I thought you were that. And it's like, okay, first of all, fucking relax. Second of all, to Ben's point, once something is released, we can't dictate how it's adopted by the world. The peers in the peer-to-peer network, those are individuals and those are nation states alike. So I think that like the conversation is going to evolve, and I think Saylor kind of opened Pandora's box. I really do. So how this thing plays out, I don't know. All I know is that number go up. That's pretty much what it's going to come down to, and I'm just excited to see what's going to happen with it.
Yeah, I'm monitoring the internal chat a little bit here too. Jesse, Mason, Ryan, you guys had some topics you maybe want to pop in and chat about.
Sure, yeah. So I think the one topic I'm thinking about is Saylor's control at 50%, and I thought it was great that they highlighted that on the earnings call for one, because I know it's a topic that everyone thinks about, and they look at the ATM and they think about, oh, if Saylor drops below 50%, the strategy is all shot and he doesn't control the company anymore. And the reality there is that for public companies, you can go well below 50% and still maintain effective control. And the reason for that is largely because if you look at public companies kind of like across the board, very few shareholders are voting on any particular matter. It's something like 25% to 30%, I believe, on like a regular basis vote at annual meetings. And it would be interesting. Someone can look it up and see how many people actually voted in the 2023 or 2024 annual meeting for MicroStrategy. They have to put out the votes and say how many folks voted, even though I think there was only kind of director election and ratification of auditors in that vote. But if you run the numbers on that and see, okay, if everything converted and if all the ATM, if he issued 21 billion in equity, how much would Saylor hold? He'd still hold well more than almost every public company that's kind of regarded as being controlled, something like Tesla, where Elon holds something like 20%. And so the reality is, like, if there's a threat, the threat is, okay, there's some shareholder that disagrees with Saylor's kind of direction of the company, and then they have to rally effectively every other shareholder to go against what Saylor wants to propose. So that sort of dilution, or his kind of ownership dilution, I think is a very low risk. And I could, if it gets cut in half, I think it would be perfectly fine, and I think he would still be able to dictate effectively everything that the company wants to do.
Yeah, absolutely agree. Absolutely agree. Good perspective. That's a great perspective. I'm hoping to shift gears here, just cognizant of time, because I think that there's a couple really big important topics that I want to continue to hit on. And Mason, I'll get your perspective on some of this as well in a minute here. But this convertible bond issuance, the performance since the issuance being a 90% blended convertible bond performance is absolutely incredible relative to the performance of 47% return from Bitcoin. And this next slide was, I love how this slide was laid out, because I think this is just so critical to understand exactly what's happening here. And this is the aha moment that I had, a few days ago, when I was recognizing that there are MicroStrategy is monetizing the volatility. They're creating different tranches of risk to get Bitcoin exposure, where you can take a little bit less volatility and a little bit less downside by just by structuring things using financial design. And I love how he laid it out here, where you've got, spot Bitcoin ETFs is 1x, right? Like that's your baseline. But a MicroStrategy convertible debt, you get 75% of the potential return, but you also minimize your downside. That your downside is limited because you're getting coupon bond payments, and you can hedge your downside. And the really interesting thing, as a MicroStrategy holder, as an equity holder, you're getting the delta. So the risk that the bondholder doesn't want to hold on to, that extra volatility in excess of the bond, goes back to the MicroStrategy equity holder. Same if they were to, offer this, fixed bond or a dividend, like a preferred share, MSTR B, like Berkshire B or something like that. And I think that's a really critical component. So like any MicroStrategy equity holder, you're holding the stock, you're benefiting from MicroStrategy offering these convertible bonds, because that a little excess volatility in excess of what the convertible bond market wants is going to the equity holders, and they have the ability to gain what the convertible bond market doesn't want to take on, which I think is really, really appealing. Any thoughts on that, guys? Ryan, Mason, I mean, Mason, what's your perspective?
Let me jump in here. So I was thinking about it today. If Bitcoin is going to take over the world, let's start with that premise. This is a binary. Bitcoin's going to zero, or it's taking over the world, right? When you deeply, understand Bitcoin, when you've thought about it for, years, it becomes apparent this is either zero or it's taking over the world. So when you have that perspective, it seems pretty obvious to me that something like MicroStrategy was going to happen eventually. Because when you think about the world and the capital markets, who has the money? And Saylor has this quote: before this year, 99% of the capital in the world didn't have access to Bitcoin, right? And really think about that. What I immediately think of is the implications for the fundamental structure of the Bitcoin market moving forward. But more importantly, it gives some context as to what's happening with MicroStrategy. What are they doing? They are securitizing Bitcoin, and they are offering it to the capital markets, to the people who have the capital. And the people in the capital markets, they have different preferences for what they want. I texted Jeff yesterday. These convertible bonds are like diet Bitcoin, right?
Yeah, it's Bitcoin Light. Trademarked.
Bitcoin Light.
We've trademarked it.
Yeah. I'm taking credit for that one. But we also have like Bitcoin on steroids here, right? And that's what makes it attractive for us, right? For Bitcoin maximalists who see this wave of Bitcoin hitting the world and we want to capitalize on it. Yeah, I'm interested in getting some leverage. I'm interested in increasing my Bitcoin per share. So this is just really obvious to me. And the the refinery is such a good analogy. That's I don't know if anyone else has anything to add to that, but it's just such a beautiful analogy. Jeff, go ahead.
Well, I just have an anecdote because I've been talking with people in the reinsurance and insurance industry about Bitcoin as collateral pretty frequently. I'm pounding the pavement on this, right? Like Bitcoin's got to be collateral, and it was crazy to me where I talked about what MicroStrategy was doing with convertible debt, and the response was there's a higher likelihood that MicroStrategy convertible debt would be acceptable as collateral before Bitcoin would be acceptable as collateral.
Mm-hmm.
And that was like oh my God, that's crazy to think about, but it's so true because it's the traditional financial infrastructure, right? Convertible debt on a corporate equity is already used as collateral in many different types of transactions. And that's more palatable for, 50, 60, 70-year-old CFOs running publicly traded companies. They can understand a convertible debt on an equity. But it's hard to convince a board about, going deep on Bitcoin, which is, it's just totally crazy to me. So you think about these pools of capital that want exposure here. You've got a $300 trillion bond market. Right? The bond market is $300 trillion. That's the total addressable market for these MicroStrategy convertible debt. They're not going to convert $300 trillion of the bond market, right? But if you're talking about capturing 1% of the convertible bond market, you're talking $1 trillion of convertible bond issuance potentially at some point in the future. That's not assuming there's any money printing or any growth in the money supply or anything like that. So it's pretty outstanding, and especially Mason. I mean, you hit the nail on the head, dude. Right? Like the concept of Bitcoin is pretty binary. It's just a crazy situation.
One thing I'll add is that just one thing about information asymmetry, because I think that's what makes this so interesting, because there's layers here, right? You have the information asymmetry of Bitcoin itself, and then you have of MicroStrategy. And a little anecdote here, I was an intern at a financial services company this summer in the Northeast. And I wrote like a 27-page report on MicroStrategy, right? Adrian actually, he reviewed it for me. So shout out to Adrian. But it went through everything. It started from Bitcoin being like using the sailor analogy of transformation of analog capital to digital capital, all the way to the reflexive flywheel, which I think Dylan created or thought of, which I think Punter and Ryan really also had some contributions to it. But anyways, my point is here, I gave it to them and we didn't get past page 1, right? They were hung up on, well, is Bitcoin, what's the value proposition of Bitcoin? The reason that MicroStrategy isn't $1 trillion company yet is because no one knows about Bitcoin. No one's done the work, right? Like that's simply it. And the more that, like, the longer period of time that people stay clueless about Bitcoin, the more opportunity there is for MicroStrategy to get this crazy lead on the entire world. It's insane when you really think about it. This is like, I don't know, Jeff. I've talked to you a lot. Like this.
Yeah. It's the traditional financial ecosystem, right? Like, so I work in finance. I will tell you, the entire financial world, everybody is working their ass off, stressed to the gills, working 60, 80 hours a week. The thought of learning a new financial monetary ecosystem makes them want to blow their brains out, right? Like, it just doesn't, like, it's hard to get the time. And that's one of the biggest things that I'm finding is it's really just hard to get the time, which it just, again, creates more opportunity for those that are willing to spend the time and get understand what's going on within the Bitcoin ecosystem, and how companies like MicroStrategy are leveraging the traditional financial design and using financial products to continue adding value to their equity shareholders and the whole entire Bitcoin ecosystem. It's crazy. I mean, there's literally, the world has never seen anything like this before, and that's the thing that I keep coming back to. There's no precedent for this, which is also makes it even harder to learn, right? You have to break your reality. And nobody likes to break their reality. Nobody wants to just completely shatter everything that they know about the existing financial world and the existing financial ecosystem.
So Jeff, I want to chime in on that.
Yeah.
Maybe because I'm a tech guy, maybe because of my age, I see this all the time. It's happened many times in my career, and even in personal life. There was a thing called Blockbuster. You used to drive a place to go get a VCR tape, and then Netflix comes out. Initially, they were shipping DVDs, and then it streams, right? And there's a company used to be called Sears that would send out a telephone book that was 800 pages, which who knows how much it costs to ship this thing, to buy products, and then that became Amazon. So these revolutions, I live in San Francisco, and we're talking about self-driving cars. The Waymo vehicles, which are built on these Jaguar SUVs, drive around. People hop in them. There's no driver. There's no backup person at all, and you can hop in them, and they drive you around the city. They're all over the freaking place. And if people can't see that happening, that these revolutions, think about Twitter or any of the social media things, whether it's Facebook or Meta. And if you don't know what the Mag 7 is and how they've altered reality, and I talked about the one before, if they don't think that's happening to finance, then they're just not paying attention.
Yeah.
Right? Look, I bought a house in 2018. It almost doubled in value. Oh my God, imagine that. From 2018 to 2024, the house doubled in value. Why'd that happen? Because of money printing. People are like, oh, you never really thought of it. Well, if your house doubled in value, you never thought about why it happened, you're just not paying attention. So if people can't wrap their heads around it, maybe they just don't care.
Yeah, I mean,
they just say something. Maybe that's okay if you don't care.
Yeah.
I'm just going to go do something else.
Yeah, it's crazy. I mean, the opportunity out there for people that want to build on Bitcoin, the people that do have time, and the people that want to build on Bitcoin, there's going to be so much opportunity in the next 4, 8, 12 years to build on Bitcoin, financial rails, financial ecosystems, insurance companies, lending, escrow, like you name it, there's going to be opportunity to build it, because the existing infrastructure is lagging, and it will continue to lag. And I'll use the insurance industry. I don't want to shit on the insurance industry because I work in the insurance industry, but like, for example, fintech, right? Fintech hit the stock market or like the, New York financial world. I want to say like 2002, where tech was starting to get into finance. InsurTech didn't become a thing until like 2011, like maybe 2010. So it's like 10 years behind, 11 years behind, even though all of the infrastructure could exist. Like I will tell you guys, there are insurance companies today that still write physical checks, and they work on computers with green and black screens. Like, I shit you not. It's crazy.
Hey, Jeff.
Yeah.
Jeff, I don't think people know what a green and black screen is. When
When
it's a green and black, when it's a black screen with green writing, that means it's running a virtual terminal that goes back to a mainframe. And the reason why they don't go off from the mainframe is because the people that programmed it in COBOL and Fortran have retired, and they can't convert it over into some server-based system that's going on. So they don't touch the system. Hopefully I could keep on to my job until I retire, and then I could just leave the mess that's here, because any form of transition to a new one means I lose my job when they screw it up.
And you hit the nail on the head. Like, legacy infrastructure is so hard to change. It's so expensive. It takes hundreds of millions of dollars to change legacy infrastructure. And even if you try to change legacy infrastructure, the likelihood it fails is really high. So like,
Right. So I got a great idea. I'm going to circle this back. So Saylor said this. He goes, look, if you want to try and beat NVIDIA and you're a company that makes computer chips, you got to make a better GPU. And then you better be able to have a piece of software that runs on top of it that's better than CUDA. So if you don't have those two pieces, and because they already have such a dominant play, it's highly unlikely that you can beat NVIDIA. Can you go be Sam Altman and raise $7 trillion and give it a shot? Sure. But what I think is kind of easy, given that there's millions of people, 3 million, half million people that follow Saylor, I don't think it's really difficult for any company to be like, hey, I can go to a custodian, have them send them money, they buy Bitcoin. We didn't hire any more employees, and now all of a sudden it's accretive to our stock. Think about that. Let's go do a huge capital purchase, hire 1,000 employees, try and go launch a new product, do something different on this, right, to try and beat the market winner. With Bitcoin, and Saylor talks about it, he's got a slide somewhere in there. Just go buy Bitcoin. Have a corporate custodian for it. It's not that difficult.
I will say on that point though, one of the things that it's been 4+ years for MSTR is it inhibits, but like you can't just, depending on the size of your company, right? A really, really small company that's basically dead in the water, like a micro cap, can just kind of maybe just launch it upon shareholders, or there's a core stake that owns most of it. But like if you're a big company, you can't just be like, hey, we're implementing MSTR BTC strategy, 130% all in. It's a no-brainer. Check out this guy's playbook. Like you have to start like they did. You have to start. I mean, they had an outsized cash position to begin with, right? But then the shareholder list is Bitcoinized over the course of 6 months, a year, a cycle, to the point where you can now, be like, the biggest issuer of convertible bonds, right? But even Saylor, even MicroStrategy didn't start like that, right? So like you have to kind of communicate the strategy, do it. If they did a Dutch auction, right, you can maybe give a shareholders an out. But I think the point is like there's people looking at MSTR all day, every day, arbing the Bitcoin price, trading it back and forth. The 100th company to just buy a little bit of Bitcoin, doesn't get the same effect, the liquidity effect, right? Like there's gonna be a lot of companies that announce to buy Bitcoin. Not all of them are gonna be able to do ATMs, right? Because like you need a liquidity and a Bitcoiner shareholder base that the MicroStrategy spent 5 years building out, right? So that's entirely unique. And I think also like the convertible note, becoming the Bitcoin's Trojan horse into the bond market wasn't particularly clear to people even in like 2021 around MSTR or like the Pubco strategy or just the general Bitcoin thesis, right? Like there's a lot of talk of contango, right? Like, okay, how's TradFi going to get involved with Bitcoin? And I think this still applies, right? No doubt it still applies. But like, how is $100 trillion of fixed income going to become Bitcoinized? Oh, easy. CME futures, and like they're going to buy Bitcoin on like, or like a shady exchange, an FTX or a Binance, buy spot, sell futures. Like that's basically a fixed income instrument. And like theoretically it's delta neutral. But the reality is there's like, these are all bucket shops and they're unregulated, and like it was just ahead of its time. That's still applicable. You can still do this, but you can't use BTC on margin at like a CME yet. But I think the point is that now it's crystal clear how Bitcoin, all of a sudden emerges in $100 trillion bond market. And like even a year ago, it was like clear to like a fringe group, but now this earnings call has come out and just like blasted the door open. It's like, hey, we're inside the walls, and there's insatiable demand for every one of these offerings, right? And like even the copycats can't fulfill the demand of these offerings, right? Because they're not 130% levered, and they don't have a Bitcoin or cult fan base that's trading every day $5 billion or X amount of dollars in daily volume in like Bitcoin or shareholder volume. So I think like that's the big idea is that like they've blown the walls wide open at this point in terms of like how the bond market's going to access Bitcoin, but also even the copycats, the prospective copycats, it can't be like a day one thing or a day zero thing. You have to like implement it. You have to do equity. You have to buy with cash flow. And then if you do it right for a year or 2 years or 4 years and like build that trust, build the shareholder base, then you can be like, all right, let's go 140% all in, or like whatever they've done. But that takes so much time, and it takes a cycle to kind of build that trust, that liquidity, and what they've done.
Yeah, one thing that I would add.
No, let me just try in one piece. Look, Dylan, look, dude, you're awesome. The terms that you used right there, I've yet to come across a CFO at any publicly traded company that would understand what you're talking about. When you talk about contango or backwardation, CME, the Chicago Mercantile Exchange, whether or not you're using a stable coin or Bitcoin as a marginable collateral to use on a different exchange, a bucket shop, all of the terms that you just spout out of your mouth, I understand that. A lot of people on this call probably understand that. If you go talk to any CFO, it is highly unlikely that they would understand even 10% of what you just said. That's the reality of it. And that's why I don't waste time with CFOs, because you just talk to them and you say, hey, EBITDA, let's try and monetize the balance sheet. And they're like, you lost me already there. So I did. There's been a bunch of questions coming up about the FASB. And it's amazing because I talked to CFOs and I talked about FASB and they're like, what's that? I'm like, the Financial Accounting Standards Board. And they're like, oh, okay, because they never think that the rules are going to change. And they have zero curiosity. They don't know about it. But there's a million people on Twitter that know about it. So Jeff, did you have any ideas on the FASB announcement?
Yeah. So that is on my list of things to talk about. We can talk about it now. We could jump in there. They did mention, I think Andrew King did mention that they will adopt FASB fair value accounting in Q1 of 2025. And what that means is any gain that they've had on their existing Bitcoin holdings from when they started purchasing in 2020 to through 2024, all of that gain will be added to retained earnings at the end of the period in Q4 2024. So when the earnings is released for Q1 2025, it won't be like a huge surprise earnings pop where all of the gain is added into one existing quarter. It'll just be the gain from that quarter from January 1st to end of Q1, so March 31st. That will be accounted towards net income at the end of Q1 2025. And that will probably be announced in May of 2025. So if we do see a massive bull run in Q1 2025, we can see a disproportionate earning per share jump based off of the gain of the Bitcoin holdings. But the existing gain just gets added to retained earnings at the end of the period, which is pretty crazy. And to your point, Grain, nobody knows about it. Nobody knows about it. Nobody knows this is a thing, right? Like even, Bloomberg and Barron's and all of the, Seeking Alpha, Motley Fool, they all are looking at the historical earnings, but they have no understanding of the FASB fair value accounting. Like they don't even reference it. You could Google it, or you could search within the document, and there's no FASB isn't even mentioned. Accounting isn't even mentioned. Change in accounting rules isn't mentioned. And it's wild to me that you've got these like bot analysts that are putting out these reports that nobody even reviews. They just say, MicroStrategy is trading at some, ungodly multiple, which I think this is a good segue to talk about, getting into multiple here, because this is like everybody's favorite topic. And I think Saylor just like absolutely dunked on that one too. So anybody want to take that one?
I just want to chime in here for a second from the beginning. I'm going to drop in 14 minutes because that'll be 2 hours. I need to get some dinner. But I'm going to say this. Look, folks, let's just assume that everything plays out what we think it is. Triple Q inclusion, FASB, S&P 500. The election is not a shit show. Let's just assume that all those things happen, right? There's a decisive winner in the election. It doesn't go to Supreme Court. The next 7 months determines the rest of your life. It's that simple. Okay. It does determine that. Don't mess this up. Assume that it happens. How do you want to be positioned? Figure that out, right? If you just want to hold Bitcoin and MicroStrategy shares, that's cool. Just do that. That's simple and easy. Don't buy on margin. But assume that all of that happens. This is the most important 7 months of your life because this determines the way you live the rest of your life. Just like 2017 for me changed the rest of my life and the rest of my family. It's that simple. We could talk about the mNAV, but if it goes above 10, does it matter? Or 20? I mean, think about how big the numbers are. Really big.
Jeff, I have something to add about moat and mNAV in general. Just kind of piggybacking off of Dylan's comment. Something that's not talked about, and I think Ryan has talked about this, is the Saylor premium, right? Why do we trust Saylor, right? And the reason that we trust him is because he's the most transparent CEO on the planet, right? No one talks about that. How many CEOs are going and doing 200 2-hour podcasts in 2 years or whatever it is, right? He's the most transparent CEO in the world. Chairman, sorry, my bad.
Long Fong.
Former, yes, of course. And Saylor can't say this about himself, right? But the reason that I trust Saylor and that I'm aligned with Saylor is, number one, I think he's a genius, and number two, we're ethically aligned. He's a Bitcoin maximalist. I think he believes it deeply. When you like, I think the video that really orange pilled me was called "Bitcoin is Hope," and if you haven't watched it, go watch that, because you'll see a side of Saylor that's, this is more than money. This is more than anything. It might be closer to legacy or how he's seen in history, because he's doing this for ethical reasons, and I don't think that's talked about enough. So if another copycat comes along, who is the person leading that? Are they smarter than Saylor? Are they more ethically aligned? Do I trust them more? No, I don't. I just don't think that's happening.
Yeah, I think the Saylor premium is. I think Ryan says that's 3 times mNAV just with Saylor. Like Saylor alone is a 3 times mNAV. But the point you made is incredibly important. He's incredibly transparent, and I think this presentation, which again will be studied in all of finance for the rest of eternity, is incredibly transparent. He's showing you exactly what he's going to do as an investor, right? If you're going to buy $1 billion convertible bond, you don't want some degen coming up on a screen and YOLOing options and doing a bunch of crazy shit, right? This entire presentation was incredibly methodical, right? It was incredibly tight. It wasn't crazy. They had a 3-year plan. Yeah, it's the biggest ATM in history, but it was structured. It was levered over time. And they've got an entire strategy. They're monitoring BTC yield. They're creating new products and new infrastructure and different types of products to reach different capital pools. And it was just incredibly transparent. And I think I said this in one of my last videos. It's like, what's Saylor going to do? He's going to buy the Bitcoin and he's going to shove it into MicroStrategy. And he's going to do it. And that's because of, he's been on this campaign trail for the last 5 years, doing 2-hour podcast presentations and cranking through it. So, I mean, it's such a big point, and transparency and trust is still incredibly important in the traditional financial world. So yeah, that's a really good point.
I think if people weren't introduced to Mason before, they got introduced tonight. I mean, everyone's got to acknowledge that it's really refreshing to have people like Mason and Dylan that are so young, but are so willing to engage and go deep down the rabbit hole on these types of topics that most people would just ignore. I mean, how awesome. Good job, Mason. Everything you've done that I've seen from you has been very impressive. So I'm glad we're in good hands as we go down the generations here. But to the point on...
Oh, yeah. Go ahead, Ben.
I was just going to say, to the point on Saylor, I think one of the reasons why people really enjoy focusing on this trade is because when you listen to other CEOs or chairmen or executives talk about the strategy of their company, typically there's so many product lines and so many development projects going on, and there's M&A activity, and you can't make sense of it. And this one, while it's complex, right? I mean, we've been digging into it for a long time now. It's also very simple, right? We're going to acquire Bitcoin. We're going to lever the Bitcoin to get more Bitcoin. And as long as you can just trust what Saylor's saying, that he's going to do exactly what he says, I think the markets really appreciate that they've learned now over a period of time, both a good period for Bitcoin and a bad period for Bitcoin, he's executed exactly how he said he was going to. So you know the strategy, and when you know the strategy and you can trust that he's going to follow it exactly how he tells you, now you can start planning, you can start running your own risk scenarios to figure out what your downside could look like on this, because there's just no mystery to how he's going to execute on this. And I think that's really important to some of the big players out there when they're investing the type of capital that they are into the products MicroStrategy is bringing to them.
Yeah, and if I can just hop in on that, you know, Ben mentioned, like, you know, other corporate CEOs, right? And it's like, look, I've studied finance for 5, 6, 7 years now. I've watched CNBC almost every single day of like the trading days during that period of time, so on and so forth, all that stuff. Every single corporate CEO or like executive CFO, like relevant person, they're so boring. Number one, like they're just incredibly boring. That's the main point. The second point is like, it's just corporate propaganda, right? They come out and they say, you know, they toe the line and they talk about, I don't know, I could make some stuff up off memory right now, but you know what I mean? It's like it's just a good old song and boy dance, right? There's a clear and ever-present distinction between all of them and an Elon Musk or a Michael Saylor type, where it's like a founder, CEO, owns a ton of the stock, does not actually care like what other people like think of them, all that kind of stuff. I mean, there is just a massive distinction between those two kind of guys. Also, you could throw like Bezos or Zuckerberg or pick your poison for like founder-led tech companies versus the entire field of very like boring people. You know what I mean? And I think that kind of comes back to like the Saylor premium, and there's many other things I could say on that topic, but I'll pass it back.
Well, I mean, I think it's probably worth talking about mNAV because, you know, again, Saylor just absolutely dunked on it. It's like, I think Ben, he took the words right out of your mouth, right? It's like, imagine them as a startup, and he's like, well, imagine us as a growth company. You know, it's like almost
well, that
identical.
Might be Ryan, right?
Yeah,
Ryan's been harping on the growth company for a while. I mean, I used the startup one, so I feel good about that, or at least I'm going to pretend that maybe he listened. Who knows?
So many correlations.
I've got anything to offer him at this point, but I mean, how cool is that? But Ryan's been screaming from the hilltops the growth company thesis here. So I got to imagine Ryan's got at least a couple things to say about the mNAV here if we dive in.
Yeah. I mean, it was interesting that he brought up existing corporations, right? He's like, it's this entire thesis that we've been talking about this whole time. What is an equity? How is any equity priced? All equities are forward looking. Did he say like something? I think, did he say Apple was like 98 years forward looking or something like that? Is that what he said? I think I might have misheard that, but you know, what is any equity and how is it valued? And, you know, you've got these stocks that are trading at 30, 50, 60 times earnings, 100 times earnings with Eli Lilly. And then whatever way you look at it, whether you look at price to earnings or price to book value, you see some insane multiples that are really hard to rationalize. And the only way to rationalize it is say that like this stock is trading at some point in the future, recognizing that you've got a technological monopoly and likely a significant moat in the marketplace that you operate in. And if you're looking at these types of multiples with growth companies, right? I think you mentioned like 30 to 50 or 60 to 100, a multiple on earnings is what these growth companies are priced on. Now, if you look at, and I think he said it on this slide that you can see on the screen here, is this Bitcoin yield KPI, their target. So in 2024, they've had basically an 18% Bitcoin yield, and they just increased their target from 18 or from, I think it was like 4 to 8 to 6 to 10. Now, if you're looking at something like a 50 times multiple for a growth company or 100 times multiple for a growth company, the way he ran through the math is taking 50 multiplied by 10 or their Bitcoin yield to get a multiple of 5 or 10. Now, if you take that same multiple and you apply it by their 2024 actual Bitcoin yield, you start to get to a multiple of something like 17. And again, I think personally, I think those numbers could be understated because nobody has recognized the power of Bitcoin as capital and being positively polarized to capital from that different perspective. And I think we could see multiples that are well in excess of that. And the fact that everybody in the market is looking at different metrics should tell you that nobody really knows how to trade this thing. And I think it's incredibly hard to trade and very, very difficult to conceptualize a multiple that makes sense if nobody knows what the multiple, there's no relative company to compare it to, right? Like you can't compare it to any other company. There's nobody else like it. What is that worth? And the market doesn't know yet. And if you're
I have a question
addressable
for you.
market, yeah, go ahead, Dylan.
I have a question for you guys, and I'm not sure, but I don't think so. I know on other podcasts, but I don't think has Saylor or anybody ever acknowledged on an MSTR earnings call like about selling volatility. Is that a first? Is that a first on the earnings call, or because on my end, one of the striking things was, and we've heard, there's been podcasts and references to it, and volatility is vitality as a tagline, but this idea that capital in US T-bills at 5 vol, or no one's usually talking about the volatility of T-bills. Like, what are you even talking about, right? It's just cash. That's how most people are thinking. But like the whole mind warp matrix, cracking the matrix, is that you shouldn't not just like value it at 1x book because they're growing BTC per share, but also the volatility is worth something. The uncertainty is worth something. You can like I know Saylor's not doing this and he shouldn't do this, but let's just say he wanted to, right? And you take all this Bitcoin on the balance sheet and there's all these derivatives going around and you sell the upside off it, right? So like you're valuing it you should be valuing it at 1x. All right, well the futures is trading at 10-12% annualized, right? The call options are trading at a 10-12% premium 90 days away. So the whole point is that underlying uncertainty is worth something. And then he's taking it, they're leveraging it up, and he's selling the vol with the converts, right? And so it's the paradigm shift. I mean, it's unique to Bitcoin because it's a bearer asset that's volatile, and we've never seen anything like it where it's absolutely scarce and has a 24/7, 365 market. But like the crazy levels to this game is that this is abstract outside of just Bitcoin. Like the abstract of monetizing volatility hasn't existed in this corporate framework, and like explicitly acknowledging it on the earnings call, and then tying it into and then we're taking that, putting it into BTC. We have BTC yield. You have to discount that. This like acknowledging it, laying it out how it was. The order of the slides was, for me. I heard most all or a lot of these concepts, and he's kind of touched on them or gone deep on them, and many different kind of mediums or podcasts, but never had kind of a straight line, boom, 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 hit on the points, right? Like the volatility is the valuable thing, idiots, right? Like
Yes, volatility is the product.
Yeah, that's what we've talked about that on some of the other streams that we've done, right? Is where they essentially took this and they said nobody else is acknowledging the volatility of their equity as their product, right? It was a different mindset to take where you're going to focus on developing that component of your business. And when he went and did that, that opens up all the other aspects of what he's doing, because he drew in all the capital and made it so attractive to the capital markets to come and be in the micro strategy products, right? The equity, the bonds, whatever it is. I just think he took a very different approach to clearly defining that out. And he basically set up this Bitcoin Treasury Company now. And their product is to go out and utilize volatility, go sell the volatility over and over and over again, and get us as much Bitcoin as possible and keep ramping up the volatility. We'll keep selling it to the market as long as they're going to buy it, which when he put up that slide that showed the scale of Bitcoin compared to the bond market and all the other asset categories, right? It was like $300 trillion were in bonds or something like that.
300 trillion.
And what is it?
Yeah.
Yeah, 1.4 trillion in Bitcoin.
Yeah.
Like, to think this strategy has capped out, I don't think he could force feed enough of these bonds into the market right now, right? With how they've performed, I think he could get rid of as many of these tomorrow as he wanted to. But other companies have just kind of looked at volatility, I think, as kind of a feature of what comes with building an exciting new business. And they didn't go, well, what if all we did was focus on optimizing for volatility? What if we took
Right.
our entire strategy and optimized it? But they have to look at it now because he just created $48 billion of shareholder value just by focusing on the volatility aspect, right? I mean, that is a huge development in corporate finance and for publicly traded equities to acknowledge that maybe this is what the big institutional capital is going to value about us.
And the crazy thing is too that Bitcoin's like one of the things we've all recognized past 1 year, 2 years, 4 years, you know, for some 10, 15 is that, okay, Bitcoin's realized volatility is going down as, you know, it's going up this S curve of adoption, right? It goes from, you know, 10 basis points of global wealth to 100 basis points to 10% of global wealth. Okay, well, annualized volatility goes from 80 to 55 now to 25. Well, okay, in the scenario where Bitcoin's 25 vol, fine, right? All that, you know, let's just say they had the current balance sheet to keep things simple. Go issue 5 billion more of converts, and all of a sudden you're back at 100 vol, and you can just continue to run the same thing. Bitcoin's vol can get chopped in half, and MicroStrategy can stay as volatile as it is today because they're looking at 5-year time horizons. They're saying, all right, so what's the realized vol? What's the implied vol? Let's, you know, okay, we'll price in 2.5, 3 standard deviation tail events to make sure we can always refi this stuff. And our bond collateral and our asset debt ratios are good. Okay, great. Now let's crank this up. Let's make our common stock volatility, you know, 200% of Bitcoin. Let's make it 2.5% of Bitcoin. Because if you think about what real estate is, right? You put 20% down, you get the loan to buy the house or buy the property. Great, but it's not mark to market, right? But like you're just that's way more levered than anybody in Bitcoin would be right now. Who's taking that leverage on? No one. Who's going to take 5x leverage, right? But if Bitcoin gets cut in half in terms of not price, but its volatility, they can still run this exact same playbook at the exact same level of execution. And so Bitcoin will become less volatile. And so MSTR's leverage ratios will crank further. And all of a sudden, like the Bitcoin's way more valuable. You have way more of it, but you can continue. Like this strategy doesn't die out, I think is the real point,
No.
right?
Right. Because
People
as,
lost. Oh, go ahead, Jeff.
as the asset grows larger, your financial leverage improves, and it's like your foot goes heavier on the gas. You know? It's crazy.
Well, people have missed the connection between the ATMs and the convertible bonds. And you know, I made that post today to talk about their leverage model because I don't think people understood the engineering component of this, right? These are two complementary products that they have out here, and they can use one to drive the other. If Saylor wants to go and create more room for additional convertible debt, he can use the ATM to go get Bitcoin that's free and clear that shifts over to the balance sheet. He's now created a bigger fair market value on the Bitcoin. And that means that 25% leverage he wants on that, he's got space now because he used the other side of the equation to fix it. The other way, you know, if Bitcoin goes down and all of a sudden the leverage ratio gets too high, they can do the same thing. He can go use that ATM again, put more Bitcoin on the balance sheet, and he can bring that leverage ratio back into the range if it starts getting away from him. So he's balancing these tools all the time to manufacture the financial standing that he wants the company to have. And he can adjust it really quickly with those tools, right? Look how fast and look how fast they can execute on an ATM. That's almost instant. So he's got a lot of flexibility there.
And they were doing this in 2023 at 1x or like 1.1x mNAV, right? So like they were improving the solvency ratios and diluting over and over again in 2023 before they were trading at this now the multiple and the premium and the BTC yield, which they weren't reporting back then in 23. Now they're saying, look, we should be discounted. This is like these are the reasons why. The market's saying, oh well, yeah, you should. There's 10 times the amount of structured products, infinite times the amount of structured products on MSTR now in public markets, the leverage ETFs, the option chain. It was there, just not nearly as liquid. And so like, yeah, like they were improving solvency ratios before this premium and the current market structure was even realized. So what are they going to do at 2.5x or 3x or wherever?
6.
Yeah.
Yeah, I mean, and it's this reflexive nature that Ryan brings up a lot, and I talk about a lot too, because as the price of the stock goes higher, as the market cap goes higher, one, Saylor did mention on the earnings call, he thinks the company's undervalued, which is just which is epic. But two, just thinking about how the design of the financial markets and how the index funds works, like as the market cap gets higher, the amount of new dollars that flow into MicroStrategy and its agnostic buyers just continues to increase exponentially, not linearly. And that just increases that financial leverage and the ability to run the strategy just more and more, which is absolutely incredible. I mean, we've got a big day coming up. We've got about 26 trading days to the QQQ rank day. So that's an exciting day on the horizon. Something to look forward to. But if we're talking about $5 billion of convertible debt in 2025, and Ben, I think we tweeted a little bit back and forth on this, is what if it's all zero coupon? Right? Like all of a sudden, or not, maybe not all of it, but right, all of a sudden, if Saylor's getting 50 phone calls tomorrow, like, hey, I heard you're raising $5 billion of convertible debt, you can have a feeding frenzy where people are fighting to get the convertible debt, understanding how it's outperformed over time. And you can start to see some competition there. And I don't know like the accounting component, but I could even conceptualize a situation where you have a negative interest or a negative coupon payment where you have this bond payment up front and you're actually generating revenue on the bond and designing. It's just financial design. You could design it however you want. You could set the premium price at 60% or a little bit higher, and hedge your downside with other financial products. So I don't know if that's capable or likely, but the concept is it can be done. It could definitely be done. And then all of a sudden you start to think about revenue there, right? It's like, holy shit.
Here's a fun thing for you, for the quants here, the quant bros, and let's assign the quant bros to it. Is what if you issue to convert at a 0% premium? What's the interest rate you should get on that, right? And the point is, the interest rate is negative, right? So you're borrowing like right. So if he's getting 1-2% at a 30% conversion premium, right? Okay, so MicroStrategy is selling calls at the money 5 years out. How valuable is that? Really damn valuable. So if he's happy to do ATMs right now, right? Because if you think about how BTC yield works, right? Some of the data that's posted out there, I think correct me if I'm wrong, but I think MSTRtracker.com has the just kind of the Yahoo Finance shares outstanding. So people are like, BTC yield hasn't gone anywhere in 3 years. And it's like, no, well, actually the way they count it is that they're front loading the share. So they issue the convert and then the shares count already in the share count in 2021. It's not like when they finally convert or when they finally, roll there, or when it finally converts or is redeemed. That's not how it is. And so when you think about that, if he's happy to sell, if I'm happy to sell $1 billion of stock right now in the next month with an ATM, okay, well then in a BTC yield standpoint, issuing the converts the same thing. You're not the shares don't count later, they count now. So like if you wanted to do a convert at not 30% premium but lower, right? If you want to do it higher, you would pay more interest. If you want to do it at no interest or negative interest, you could just strike that a little bit lower. And the crazy thing is like if you tweak the leverage a little bit and they get like, that 1.2.5x goes 1.4x, all of a sudden these converts are more valuable. And so like they're obviously running the numbers on this. I know they are. and all these bond guys on Wall Street are like, drooling at watching this, like seeing this presentation, or just, their buddies got a fat performance bonus from holding a zero coupon bond, and they're like, what the hell's going on? Right. So like, I mean, I don't know what to exactly expect, but like converts, the preferred stock, like I think we're going to see some really interesting things, maybe by the end of Q4 in terms of like the preferred stock and some of those other ideas, but maybe that's a 2025 thing.
Your
now
go ahead, Ben. Go ahead, Ben.
Yeah, I was going to say for now, and Saylor made this point on the call, they're really the only game in town for Bitcoin-backed bonds, right? And yeah, they're unsecured, but they're backed by the balance sheet strength of Bitcoin bonds. And so when you see the performance of it, I mean, yes, one of the miners did one of these. That's not the same thing as what MicroStrategy's doing. So I wouldn't expect them to get nearly the terms. But when they can go around Wall Street now, showing the performance of their convertible bonds to these guys, and they're looking at, if you get the competition ramped up for these, and they go, do I care more about a 0.625 coupon or having the bond, right? Because they're making money on the bonds, not necessarily on the coupon, right? Yeah, the coupon's a nice addition. That ain't why they're buying these bonds, right? They're buying these bonds because the underlying equity moves, and that option gives them that ability to hedge in and out of this thing constantly to capture the difference. And so these guys want these things bad, I think. And so it's going to be interesting. And they did highlight, if you look in their slides there, I can't remember which one it was on, but they show kind of the laddering of all their convertible bonds that they've got out there right now.
This one.
And there's that glaring hole in 2029, right? And so something's coming, right? They're going to fill that one. Maybe they're waiting to see if these 2027s will convert, and maybe they'll roll those to the 2029. But that's not a very far out maturity in the grand scheme of things that they've been issuing. I could see that being one of those first ones that pop in as another zero coupon. And it sounds crazy until you look at the first one they did. And wasn't that one 50% out of the money? And that was before they had any of the performance data to back these bonds, right? I mean, so they've already done a zero coupon before. So while it sounds crazy that they're going to have no cash flow impact from these bonds, it's a real possibility if the demand is there for these.
Dylan, your comment on all of these bond buyers getting huge bonuses reminded me of the scene in The Big Short where the guy was like, "Oh, I just sold $50 billion of mortgage swaps," and he's like buying the fanciest champagne, and like everybody's going crazy. I can imagine the same thing's going to happen in New York, right? People are going to be going to clubs. They're going to be these bond traders that have bought Bitcoin-backed bonds, and they're going to be buying Dom Perignon. Like they're going to have strippers everywhere. Like it's going to be crazy. And the people are going to be like, dude, how'd you make all your money? It's like, dude, I bought some Bitcoin backed bonds from MicroStrategy. And it's like, there's the feeding frenzy. There's the reflexive. That's not priced in.
The FOMO flywheel.
Yeah, that's not priced in. There's no way that's priced in. Oh my God. That's crazy. Oh my God. Wow.
Let's not pretend there's not greed on Wall Street, right? If you don't think those guys are talking and flexing on each other over there, the guys that are holding these bonds, crushing all the competition that's holding 20 vol convertible bonds, forget it, right? These guys are shoving it in your face.
And Tim, I know you haven't talked in most of the show, but you could be our boots on the ground there. I mean, you might have to sneak into some nightclubs and see if you hear any like Bitcoin backed bond talk and what's going on. You hearing any rumblings there? I know you're close to some people in the crypto community. What's like? Are people even watching this? I think only 4,000 people watched the MicroStrategy earnings call. There's like 4 times that on this call right now.
Yeah, just crickets here in New York. We're super early, so super bullish.
Maybe we can get you to be a plant at all the high-end bars where these guys are talking, and you could just keep casually talking about, you really got to get these MicroStrategy bonds. It's worth getting nothing in a coupon, and you can plant the seed.
I was at the Campbell this afternoon, so maybe you'll have to hit a few places.
They're speaking with their capital allocation, though.
What's that?
I said they're voicing their opinions via their capital allocations, I think, versus, all of us, if you go out in the public and you talk about MicroStrategy or even Bitcoin, there's crickets, of course, but you can see how much capital is flowing into all these different markets, both the equity markets, the option markets for MicroStrategy, the bond markets, and it's pretty clear that it's on the radar of enough people to make a difference. And it's an interesting thing to think about when you think about sort of like corporate strategies. And you could go out and try to convince a lot of companies to try to allocate to Bitcoin, and but I think the real difference maker will be people shifting their investments away from companies that have huge cash reserves of kind of a melting ice cube, as Saylor put it, and moving that capital into companies that are more careful with their allocation and more forward looking, as MicroStrategy is.
Yeah, you hit the nail on the head. The next 12 months, it'll be interesting. And Jesse, you got to keep us in the loop. If you see or hear of any filings that come through of companies that are researching this stuff, I know that's a big ask, and maybe we can set up an algo that scrapes Edgar, which would probably be the best way to do it, because that stuff is incredibly dense and boring to watch.
There's a lot of people. There are a lot of people with a fair amount of capital, and including kind of big Microsoft shareholders who are keyed in on this kind of phenomena that's playing out. Now, I expect we'll see a lot more on kind of the corporate front, and directors will feel the pressure as well. I mean, including Microsoft directors, to fulfill their fiduciary duties, and they have to act in the best interest of the company and the shareholders. And I think a lot of these directors will pay attention, but I'll let you know if I see anything.
Yeah, I mean, even Tim Cook has talked about owning Bitcoin, right?
Mm-hmm.
And Tim Cook has talked about owning it. It'll be interesting to see. I think even Meta, I think Zuckerberg named his dog something after I think like Satoshi or something like that. He's named his goat something. I don't know, something weird, something totally Zuckerberg. I mean, these tech guys they're aware of it. It's just a matter of whether it trickles in. And I mean, the election's big, right? Like next week is going to be huge. We'll see what that looks like. SAB 121 allowing banks to custody Bitcoin, that getting vetoed by the president was a big just a pause in the market. Everybody's kind of like, well, all right, well, we can't work with our bankers to do this. Like, I don't want to work with Brian Armstrong at Coinbase, who's doing $1 billion stock buyback. I want to work with my guy at Morgan Stanley that I trust. Like, I don't trust Coinbase. And if there is a regime change, I would assume SAB 121 gets, I guess, repealed. Is that what it is? I don't know. One of the directions.
It's like the SEC guidance. If Congress can basically say, "Hey, SEC, your guidance is no longer effective," they can kind of override the administrative guidance, and that would then allow banks to custody it without it kind of having this really harmful effect on their balance sheet, which is huge, as you said. Like a lot of these companies, they don't want to deal with Coinbase or BitGo.
Yeah.
They need their banker to hold this Bitcoin, and I think, as Saylor said, it's a big. If that can go away, it can usher in a ton of companies putting it on their balance sheet.
Right. And that was bipartisan, which was crazy, right? It passed with flying colors. The Senate passed it, the House passed it, right? And it was 60 or 70% voting passed on both sides. So it'll be interesting to see how that plays out. The next week is going to be crazy with the election. I mean, ideally, we know best case scenarios. We just know who the president is at the end of the week next week, right? Like that would
Who is it?
That would be nice. Yeah. So I think the last thing I wanted to hit on here, and we're getting close to almost 2.5 hours, which is crazy. And I've got 17,000, almost 18,000 people that are on this restream, which is nuts. Totally crazy. But I wanted to hit on this. This BTC principles page was also just incredibly epic, and it just continues to hit on this absolute transparency component because I'm sure this is going to be a part of every single earnings call from here on out moving forward, right? And they've mentioned multiple times they're not going to do anything crazy to like try to benefit option holders here or anything, right? Like their sole focus is MicroStrategy equity holders, increasing BTC per share, and then following these principles as were outlined here. I mean, were there any in particular that were big takeaways for you guys?
Well, I think number one, it's there for a reason, right?
Yeah.
They're going to buy Bitcoin. That's all they're going to buy. They're going to securely store it and they're going to hold it forever, right? That is the message. And that's what he wants to project out to the market. And we can believe him, I think. He's shown that.
Yeah.
I thought it was interesting that he kind of put a pin in any idea of M&A activity. It sounded like he was saying,
yes.
We're not going to be acquiring another company unless it can kind of surpass the returns we can get on buying Bitcoin, which I thought was really interesting because I think a lot of people are thinking about, hey, if we buy this company, why don't they buy a company that's cash flow positive? Then they can lever it up and they can get more debt and they can have more cash flow to pay interest. And I thought that was really interesting that he said that and kind of straight up said, no, we are buying Bitcoin. We are providing these various instruments to all the markets that want Bitcoin. I thought that was great. But Mason, you were going to say something. Sorry.
No, I just want to actually piggyback off that because I never thought that they would ever buy a company. I just don't think it makes sense when you look at you're buying Bitcoin, which is the most efficient asset in the world, right? It has the most potential. And the whole point of Bitcoin is to get away from risk. And when you buy a new company, you're introducing so many more factors, so much more risk that it's also, it would just be a time suck. Like this goes back to the point of laser focus, right? Let's be focused on the Bitcoin acquisition. And what I was going to say is that this reminded me of the 10 rules for life by Saylor. I don't know if you guys know about that, but he laid out 10 rules for living a good life. And this is like the 10 rules for a Bitcoin treasury company, right? This is what you do. If you want to do this and you want to do this right, this is how you do it. And it's stuff like this transparency. No other company is going to get my trust, at least to the same degree as Saylor and the principles that he's laid out here.
Yeah. I mean, go ahead, Ryan, jump in there.
Agree massively with everything Mason just said. And I do want to kind of bring this back to the company acquisition idea. Myself and Ben have talked about this on the phone. We've done one-on-one, Google Meet, Zoom type things. And we've like brainstormed on the idea. Myself and Peter Dunworth have also talked about this, like the idea of like MicroStrategy is like a mini Berkshire in terms of just gathering up other companies in order to like provide more free cash flow, which then just ultimately expands what I call the budget. I want to TM patent that the budget, which is the annualized interest expense, right? Because the more cash flow that like the collective entity has, theoretically, like the more aggressive the Bitcoin acquisition strategy can be at that point. Today was a learning point for me, clearly for everyone, where I just think it was so telling how he said so directly when he was like, yeah, I've been a public company CEO for 30 years, but he was probably at first thinking like when he founded the company before it was public, all that stuff, because Saylor's been doing this stuff longer than me and Jeff have been alive. Mason, a couple other guys, like he's been leading this company both
92.
Yeah, and that picture of like, and I can't believe we haven't even talked about that yet. That picture of what like Jeff is like wearing was several years before me and Jeff were born, and like a decade before Mason was born, at least. You know what I mean? So it's like he's been doing this stuff forever, and for him to, you know, be so direct about that, like, look, I've been doing this stuff for decades, and I forget which number he said, 97 or 98% of acquisitions are all bad acquisitions. I think that's remarkably telling about the future strategy. And I get it. We brainstormed about this stuff, like acquiring other companies, and I'm sure those conversations will keep going on, as they should, because we're all learning together. That's the main point. If I can express one idea of my whole like live stream today, that's the main singular idea. We're all learning together, Sailor included. He even said that on the call, where he's like, I meet with shareholders, like they have a say in like the company's direction. I love that stuff. But I of course defer to his judgment. If he's saying, you know, 97, 98% of acquisitions end up being a bad acquisition, I'm with you.
I think
for
what
the
we're
investor
also learning
bakers.
is the phases of this strategy as well, right? Like MicroStrategy is entering a different scale in this strategy, right? I think if you're looking at this as a new company that's starting out, I do think the cash flows are important. Because I think if you were just starting this as like a Semler, right? And you came out and said, we're going to buy all these and we're going to service all the debt using our ATM. Well, you don't have that type of liquidity yet. The market doesn't trust that this is your strategy. They don't know what exactly it is that you're saying you're going to do. So I think the initial cash flow being able to cover it is good for the market to see. Now I think Sailor's saying, look at all the value we've created. We can now do this differently than someone who's just starting out. So I think it's going to be important for the smaller companies to study their early approach, right? Of using your cash flow to acquire Bitcoin, taking on traditional debt to acquire Bitcoin. You can build that volatility on your shares and push any of the share dilution events further out down the line when you could refinance your traditional debt with a new convert or something once the market starts putting some type of a premium to your shares. I think they have to focus a little bit on that starting block position to be able to implement this and figure out what that roadmap looks like. And luckily, they've got history now that helps that. The other thing I'll say with the principles here is the two I love to tie together is number 2 and number 6. I think those are awesome, right? Number 2, prioritizing common stock long-term value creation, coupled with number 6, grow rapidly and responsibly. That's the bull fuel right there, right? That tells you exactly what he's focused on, and I love that.
Ben, I wanted to throw out one question for you on this idea of other companies pursuing the strategy. And it seems like, you know, we're looking at it from the standpoint of, you know, can any other company execute this? But it seems like Sailor and MicroStrategy are going to these companies and saying the real test is, you know, is your other reserve asset, is everything else you're holding and doing going to be more kind of accretive to shareholders than putting that money into Bitcoin? So it sort of seems like that. I want to get your thoughts on whether it's, you know, if you go to Meta or whatever, Microsoft, and the argument might more be like, hey, you're holding all this cash and it's losing value. Just buy Bitcoin. You don't have to pursue, like, you know, an over-levered strategy to then kind of get your stock price up, but it's going to be accretive because you're in the hardest asset in the world. I don't know. What do you think?
I think that's exactly it. I think we need to segment the types of businesses here, right? And for those types of Meta or one of these power companies, right, that's throwing off a ton of cash, but they're building all these huge cash reserves and they have no way to deploy it to continue to accrete value for shareholders, you're starting to see all these big tech companies start issuing these dividends, right? And as we've talked about several times, dividends kind of seem like an admission of running out of ideas to scale your business anymore. You're kind of signaling critical mass to the market, saying, now we just got to give it back to you. And I think that if someone like a Saylor is talking to those guys, he's going, you have another option. You can go and convert that. Just take your cash balances that you can't get rid of. You can't find ways to deploy, move it over to this hard asset that now sits on your balance sheet and can continue to accrue value for your shareholders, right? It will make you a more valuable company. They're not going to be able to get to the scale to do the leverage and the volatility play that MicroStrategy is. But those are the ones that I look at. And that's when I start to think IBIT and these options that are starting to launch. That's where I think that's a big deal, because I think those guys are going to have a much easier time converting cash to Bitcoin, doing it through a product like these ETFs that they now have derivatives that they can hedge their downside, right? These aren't companies filled with unintelligent people, right? There's a lot of brilliant people at those organizations, and they'll come up with managed hedging strategies where maybe they can take away a lot of the downside, but stay net long Bitcoin if they're believers in the growth trajectory. So I think that's going to start becoming a very big deal in those big cash-rich companies. And I don't think that we should even be trying to push those into the levered model MicroStrategy is doing. It doesn't make sense.
No.
They can't get enough of the value of their balance sheet to be Bitcoin, right? I think even Saylor said it before. You really need more than 50% of your balance sheet to be Bitcoin before you're going to start achieving any of the volatility benefits that come along with it. So for those, they're too big, in my opinion, right? Now, if Meta wants to come buy a ton of Bitcoin, I'm in. But I don't think it's the strategy for them. I think it's the strategy for those smaller companies that can make an immediate shift in their balance sheet to leverage that and try to replicate the model that MicroStrategy has. So I segment the two into different conversations.
Yeah, I again, you hit the nail on the head too. I mean, damn, we're dialed. We're all dialed right now. So really, just get off zero, right? Like, just get off zero. Like, have a debasement hedge in your portfolio. Like, you're insane if you don't have a debasement hedge in your portfolio. Like, if you're holding cash, like, what are you doing? At 1%, like, hold a debasement hedge. It's like it's not even complicated. Right. It's not even an inflation hedge, right? We could talk about inflation, but there's really two components, right? Like, you've got an inflationary component, you've got a debasement component. And I think largely the entire marketplace is under hedged on debasement. Maybe they feel comfortable with inflation, but they are largely under hedged with debasement. Yeah, it's interesting.
I think it's an approach to a problem they all know that they have, right? I don't think you can go and run into anyone who's going to say, no, I don't think the dollar is going to keep debasing, right? That seems like the most certain outcome that you can possibly look at.
Yeah. But
and now people are just looking at what's the approach to how we mitigate that. And I think that's a conversation you can have openly amongst these companies, particularly the ones that are having these huge cash balances they can't get rid of. I think that's a non-threatening conversation for companies to have amongst themselves. And I think that evangelizing and things that they were saying that they're going to do, I think that's going to be one of the really important aspects of it, is telling that story, but backing it up with all the knowledge Saylor's already accumulated along the way.
Oh my God. We're on for an exciting next 12 months. The next year is going to be nuts. I mean, we're at 2.5 hours. We got to rip the Band-Aid on this thing. Thank you, everybody. Thank you, everybody, for joining our second episode. I mean, how epic that it follows just like the Michael Jordan of finance, right? Giving the best financial presentation probably of all time. I mean, it was absolutely masterclass in presentation and like PowerPoint design. It's totally incredible. So thank you, everybody. Once again, we'll mention that this is not financial advice. We have had quite a few other people drop off since this kind of went long, but thank you for joining.
Hold on.
You got another thing, Ryan? Go ahead.
I go to the bathroom and you guys try and like wrap it and like rug the space. We're going until the sun comes up in my background.
You're going till the sun comes up. I'm going to bed. I've been up since 3 o'clock this morning.
I go to the
Get outta
bathroom
here.
and you guys rug the whole space. What are we talking about?
Tell us the reality, Ryan. What's the reality?
What's the
Whoa.
reality? We're going until the sun comes up behind me.
Let's go.
Oh, good Lord. He's dialed.
Ryan, some of us actually sleep, man. So it's
Oh, don't do that, Mason. You know what
You
he's
can't
going to
sleep
say.
in a bull market.
Who would
You
sleep
can't
in a bull market?
How could you sleep right now? I'm gonna try and go to sleep. If Jeff makes me try and go to sleep, I'll try. But it's like, what are you gonna do?
I was handler.
It's like, what are you gonna do? You're just gonna be sitting there thinking you're gonna be on Twitter scrolling anyway. We might as well go until the sun comes up.
I'll let you
Let's
take
go.
the charge on that. I gotta take a break. I've been up way too long. So
I'll be here
Jeff.
for myself, just talking with the live chat.
Like, you don't
sleep,
start
he's
your
not
own on the
leaving.
stream.
all right.
All right,
Jeff, before we go,
hit it.
we
Yeah,
need to
Mason.
shout out the MSTR True North X account.
Yes.
Follow it if you're not. It's
Throw it in the
where you
chat.
get all of our live updates.
I should
Someone-
have
someone
done
put
it
in
at
the
beginning.
chat.
Mason, do it at the beginning next time.
Okay, I will.
MSTR True North. That's our X account. Irresponsibly Long is the X community. There is a Discord called the MSTR Den. I think you can just Google all of those things or just search in X somewhere. You should be able to find them.
Remember when Sailor echoed the words "True North" on the stage? How crazy was that in the
That
group
was just-
chat? We were all
That was so wild.
That was just a strange coincidence, Ryan. That was just such a weird coincidence.
Just
Yeah.
totally strange coincidence. For those that are watching, we had an internal group chat, and the group chat blew up with like 16 messages within a second of when he said True North. That was just that was totally crazy. The chat was just like, oh my god.
Even if it is coincidence, it's the reality that I'm living in. I'm owning that reality where he shouted us out.
That was a little shout out. It was crazy. It was so fun. Well, that's so good. Anyway, I think that's good. I'm gonna rug the space. I'm gonna turn it off. Thank you everybody for joining. I've got almost 19,000 people on the restream. So and it just keeps climbing, which is crazy. And that doesn't even count YouTube and everybody following there. So thank you everybody. We'll be back next week. And we'll be sharp and tight, and we'll get it going.
You guys are the best. Thank you so much for joining. The people on the panel, I consider you guys like some of my closest friends already, and I've only met like half of you guys in person. The people on the chat who dealt with all like obscenity, thank you. Like this, we have so much fun doing this. I don't think of this stuff as work. It's not. I'm trying to push until the sun comes up. This is awesome, and we'll be back.
All right.
I'm on the East Coast. The sun's coming up now.
Oh, Jesus.
Me too.